Assalamu alaikum wa rahmatullahi wa barakatuhu. Thank you all for joining us today. Alhamdulillah, a lot of people have already come in and we have arrived on time as we promised. Thank you for your support so far. Thank you for registering in such high numbers for this one. This is going to be a masterclass followed by a certification that inshallah all of you who are attending will get. In this episode of our webinar series, we are going to take you through the entire Sharia screening criteria and go step by step as to how these things work. Inshallah, in future, we will do a more detailed webinar on dividend purification. We have done that. We've done one earlier. We'll repeat that again. And we will follow it up with one more masterclass on intricacies of Sharia screening. That is comparison between probably the AOFI criteria, the other criteria that, let's say, for example, the S&P, Dow Jones, MSCI, FTSE criteria. But this webinar, we are going to focus on learning as to what is Sharia equity screening criteria and understanding it even further. For all those who have joined us previously as well, yes, this television screen is new behind us. Inshallah, we will make use of this as we go along in the next webinars as well. But I have all the content ready on slides. And we will go ahead and start this thing. This will also end with question and answers. So there could be two types of Q&A. One is specifically related to what has been discussed today. We will take all the question and answers at the end of this webinar. And as usual, we will try and answer all of it. So please go ahead and start posting your questions. Okay. A lot of people have said Assalamu alaikum. Wa alaikum assalam. Yep, I'm on air, so everything is fine. My colleagues have also confirmed it. Perfect. Let's get started. So let me try and bring you the screens as I had promised you last time. Let's get started and start sharing my screen. Before that, that's not the presentation. This is not the presentation. And I have my presentation ready. Cool. Share. Yeah. I'm just waiting for a confirmation. Wow, that's a lot of people who have joined in today. Alhamdulillah. Cool. Yes, so I've got a confirmation that my screens are now visible. So this, as I've said, is going to be a masterclass on understanding Sharia compliance criteria for equities and stocks. All of you who are attending this will also be presented with a certification from Islamicly that you've attended this and you are now masters of Sharia equity screening. Let's go get on. So the agenda is going to be how Sharia stock screening criteria works, what are the non-permissible areas of some common stocks, why are some companies classified halal even with interest income, the basics of purification, and then we will give you a small demo of the Islamicly products as to how Islamicly can help you in figuring out which stocks are Sharia compliant and which are not, followed by the question and answer session. Although the topic itself is quite large, I will give you as much understanding as is possible in the short time that we have today so that you can get accustomed to understanding in detail what is a halal stock and what is not a halal stock. We may, if time permits, touch upon the trading rules as well, as to what are the trading rules, but I'm not very optimistic that we may have that much time. So we're going to cover the screening criteria, the areas of non-permissible incomes of some big stocks like Facebook and Amazon is what I'm going to cover today. Why are some companies classified as halal even when they have interest income? So this is a question we get asked a lot. And then the purification. Let's get started. The Shariah screening process has 2 levels. A lot of you might already know it, but for the new beginners who are joining us, there are 2 things that a Shariah criteria looks at, which is the business sector screening and the financial ratio screening. It is very important for a stock to be classified as Shariah compliant to pass both the levels of screening. That is, it should pass the business sector screening as well as it should pass the financial ratio screening. Now, before I move on, a lot of people also ask that if a company passes the business sector screening but fails the financial ratio screening, can we still invest in it? The answer is absolutely no, because to be classified as a halal stock, it has to pass through this screening criteria. Now, if you selectively do a process, then it does not mean that you have followed the process. So the answer, before I get into the discussion to that question, is a stock to be classified as Shariah compliant, a stock to be classified as halal for trading purposes has to pass the entire screening criteria. And the screening criteria has 2 parts, the business sector screening and the financial ratio screening. Let's move ahead with the business sector screening. So as most of you might have understood, but may not have had a clear idea as to what is sector screening, Shariah screening says that companies which derive income or which are involved in these financial sectors, in these business sectors, are not considered Shariah compliant. So a company which has to pass the business sector screening or simply the sector screening has to not have, okay, or in simple language, should not have revenue from these sectors. So the sectors are alcohol, conventional financial services, gambling, pornography, advertising, media and adult entertainment, trading of gold and silver on a deferred basis. These are the areas from which there should be no revenue which should come in a company to pass the sector screening criteria. Yes, there is a threshold, and we will discuss the threshold in some time. Let's get into the details as to what are the things that a company should not be doing to pass the alcohol level screening, to pass the conventional financial screening, services screening, gambling, pornography, and the other things. I will take you through each and every sector so that you get a deeper understanding as to what is it that from a business perspective in a listed company what is it from a sector screening perspective in a listed company is required to be checked so that it passes that level of screening. So alcohol. So companies deriving revenue from all forms of alcohol are considered non-permissible, right? Now, so it involves brewers, so people who get the raw material and make alcohol out of it, distillers, wineries, people who package this alcohol, people who do wholesaling of this entire activity, people who transport alcohol, and people who sell alcohol. So that includes pubs, bars, etc. This also involves people who are involved in the chain of it as well. So if you go ahead and see any advertisement that these alcohol industries guys do, and any company which is running the advertisement of alcohol suppliers or for alcohol sales or for alcohol retailers, that and are also considered non-permissible. So companies which derive revenue from all forms of alcohol are considered non-permissible. it does not mean only one segment. It is the entire gamut of things. So if you're a brewer, if you're a distiller, if you're a winery, if you're a packager, if you're a wholesaler, if you're a transporter, if you are a last mile seller, all of it is considered non-permissible. So this involves producers, bottlers, suppliers, retailers, and all other support functions serving and deriving revenue from the alcohol industry. For example, if you have an online e-commerce platform which supplies groceries as well as alcoholic drinks, so the revenue from selling of alcohol will be considered non-permissible. For example, if you have a sugar manufacturer, so sugar manufacturing process involves as a byproduct a product called molasses. If this molasses is sold off to an alcoholic industry, the revenue from the sale of molasses is considered non-permissible. Now, these molasses can also be used for ethanol production, which is an additive to fuel, to our normal gas, as we get in many countries. If that is done, it's compliant. So the end use of it is also considered while classifying companies as permissible or non-permissible. So it's just not people who manufacture alcohol. It is the entire chain of activities which is considered non-permissible. Any questions, please keep posting and I'll answer them at the end of the session. Let's move on. So as I've mentioned, specialized crop producers which grow and sell crops exclusively for alcohol production. For example, just a second. Okay. There can be activities which are compliant on its own, but in combination, they may become non-compliant. The example over here is a barn farmer growing a specific variety of bran and sells its produce to an alcohol manufacturer. So growing of wheat or growing of fruits, okay, or growing of bran is a compliant activity. But if you specifically grow grapes or any other fruit or rice or any other ingredient which is specifically designed to be used by alcohol producers, then that revenue also becomes non-compliant. All right. Another specific example that we look into while screening for companies on Islamicly is even capital good manufacturers. So if you look at a capital goods manufacturer, that would mean a company which is manufacturing machines. Blindly, it will not become compliant because we'll have to consider that are they building custom built machines or automation engineering companies manufacturing or a brewing or distilling machine. So a custom built machine manufacturer or an automation engineering company manufacturing or distilling machine, the revenue from such machinery sales will be considered non-compliant. There, we consider this as non-compliant because it is specifically made to be used in an alcoholic industry. For example, if a bottle manufacturer manufactures a bottle specifically to be used by an alcoholic drinks manufacturer, then that is considered non-permissible. If a bottle manufacturer manufactures a bottle which is a standard configuration and that is being bought by an alcohol manufacturing unit and being used to sell alcohol, the bottle manufacturer does not become non-compliant because he's not changing his product. He's just selling it. And as long as he doesn't have control over who buys his product, he's compliant. If he has a specific contract to sell these bottles to an alcohol manufacturer, then that revenue also becomes non-compliant. So it is this level of detail that goes into screening for companies at Islamicly. Okay, so I've already spoken about the bottle manufacturer, so I'll just read it out. So bottle manufacturing companies making specially designed bottles used for packing alcoholic beverages. Example, a specialty glass bottle manufacturer making custom designed wine bottles as well as other bottles. The revenue from manufacturing such custom designed wine bottles will be considered non-permissible, whereas the other revenue from designing regular bottles will be considered permissible. Similarly, packing material manufacturers producing alcohol packing, example, a bottle label printer undertaking to design and print labels for alcoholic beverages, in addition to it printing labels for other non-alcoholic beverage producers. Revenue from sales of alcohol industry will be considered non-compliant. So in this packing manufacturer example, if a packing manufacturer makes packaging material which is used by alcoholic beverage manufacturers as well as non-alcoholic beverage manufacturers, the percentage of revenue he earns or that company earns from selling its packaging material to the alcohol industry will be considered non-compliant. Definitely the last point, pubs, bars, and clubs are non-compliant. In addition, while we screen for entertainment venues, event organizers, we also look at entertainment venues which serve alcohol. For example, an amusement park, so there are a lot of listed amusement parks today. An amusement park operator selling alcohol in its food courts or stalls, that percentage of revenue it earns from selling alcohol will be considered non-compliant. Sports clubs. Usually people think that of the very few sports clubs which are listed, they must be compliant because they're promoting sports. But there is a component of of non-permissible income in those businesses as well, because they might be selling alcohol in their clubs. Restaurants, definitely. Some restaurants in many countries sell alcohol. Supermarkets and departmental stores selling alcohol. Here also we need to be very careful. If you're screening a supermarket or a retail company which sells alcohol, you need to figure out what is the percentage of revenue that is being derived from selling of alcohol. I've already discussed the sugar manufacturers. So these are all the areas and all the specific things where a company could become non-compliant because of its revenue from alcohol. Now, this scenario also leads us to a question that a lot of people ask us, that these companies per se look compliant, but why are you making them non-compliant? It is because of these activities. So a sports club might look pretty much Sharia compliant because its main activity is doing sporting activities. But if its revenue from selling alcohol in its restaurants or its events exceeds 5% of its revenue, then it's non-compliant. Let's look into one more aspect of selling alcohol, which is in this specific example of real estate. Usually, a lot of people think that if a company is involved in real estate, everything is compliant. So let's look at real estate companies and the issues that they have with respect to alcohol. So real estate companies leasing to restaurants, bars, supermarkets, these companies can be tricky. What one needs to ascertain is the amount of area being utilized for alcohol sales and not the proportionate revenue share from alcohol sales. Okay, let me read it again. In this specific example, when we are analyzing a real estate company, the revenue the real estate company derives from sale of alcohol should not be as a percentage of alcohol sales to total rental income. No, you can't do that, because a real estate company has actually lent out space to another person, and that person sells alcohol in its stores. Let's look at an example and it will be very clear. A real estate company owning a mall has leased space to a supermarket. So a real estate company owning a mall has leased space to a supermarket. This supermarket also sells alcohol. Let's say the real estate company derives rental income of $100 from the supermarket. So when a real estate company gives out space on rent, it is liable to get rental income. So that rental income, let's say, is $100. Based on markets, if we know or assume that about 10% revenue of supermarket is from alcohol sales, we may proportionate that 10% of rental income of the real estate owner is from a non-permissible source, that is alcohol sales. The non-permissible revenue of that real estate operator in this case will be $100 multiplied by 10% equals to $10. You got it? Now, let's look at the second paragraph. What the Shariah committee says, non-permissible revenue for the real estate owner should be as per the area used for non-permissible activities by its tenant and not the financial value of the same. Hence, if we assume about 5% of floor area in the supermarket is used to store or display alcoholic beverages, the non-permissible revenue for real estate owner should be $100 into 5% is $5. It's clear? Okay, let me tell you in some other words. A real estate company has given out some space to a supermarket. That supermarket, we assume, derives about 10% of its revenue from sale of alcohol. Now, the income that the real estate operator gets, which is $100, is 10% of that income non-permissible? The answer is no. Because the real estate operator has given out space. The percentage of space used for storing or displaying or selling alcohol should be the percentage of revenue which is non-permissible for the real estate operator. Hence, if we assume that 5% of the entire supermarket space is used for alcohol display and sales, because usually alcohol sales is restricted to a specific area in a particular supermarket because of regulatory activities, the revenue proportionate to that area will be considered non-permissible for the real estate owner. But if we are analyzing the supermarket chain, if the supermarket chain is listed and we are looking to analyze the non-permissible revenue of the supermarket chain, then 10% of that is non-permissible because that is a proportion of its income. Let's move on. The second criteria that is considered non-permissible revenue is conventional financial services. That is, companies engaged in conventional interest-based financial services are considered non-permissible for investment by Shariah compliant investors. This is pretty obvious. That is, if a company is involved in conventional financial services, which are commercial banks, investment banks, mortgage lenders, mortgage agencies, capital markets, including stock exchanges, okay, and specialist finance houses. These are considered non-permissible financial services. A case in point over here, everybody understands that a conventional bank, because it earns money from lending activities which makes interest, it is considered non-permissible. But let's look at the point number 5, capital markets, including stock exchanges. Did we not hear, and is this whole discussion not about investing in stocks? And isn't investing in stocks Shariah compliant? Yes, investing in stocks is Shariah compliant, but that does not mean that the stock exchange as a business is Shariah compliant. So this has been discussed very thoroughly with the Shariah board, and the Shariah board believes that conventional stock exchanges and capital markets are Shariah non-compliant, not because it allows trading of equities, because of a lot of other things that they do. Allowing or conducting operations of buying and selling of equities or stocks is a Shariah compliant activity, but a stock exchange also is involved in a lot of non-permissible activities. For example, underwriting a lot of shares, ensuring a lot of their risks, coming up with such products and such contracts which are clearly Shariah non-compliant, and they make a good amount of revenue from such kind of activities. Hence, a stock exchange is usually considered to be non-permissible because of those aspects, not because of allowing trading in equities. Okay. In addition to that, financial brokerage agencies, investment management firms, stockbrokers, pawn shops agencies, mutual funds and financial institutions, underwriters and insurance companies and insurance brokers are considered non-permissible as well. One of the things that must have caught your eye is stockbrokers. Yes, stockbroking as activity is Sharia compliant, but a lot of stockbrokers are involved in conventional contracts, which are futures, options, underwriting a lot of contracts in a non-Sharia compliant manner, lending stocks in a Sharia non-compliant manner, makes them Sharia non-compliant. So stockbroking as a business is Sharia compliant, but the way these businesses are conducted in today's world makes it non-compliant. Similarly, doing a financial service is absolutely compliant if it is done in a Sharia compliant manner, but if it is done on an interest-based manner, it is non-compliant. Now let's look at the exceptions to this rule. So if a company is an Islamic bank or an Islamic financial institution or an Islamic insurance company, it is considered to be Sharia compliant. Now, what is an Islamic bank? What is a financial institution? An Islamic financial institution? What is an Islamic insurance company? Now, the Sharia committee has gone ahead and defined these activities as well. So a company involved in financial services will be considered Sharia compliant if a Sharia committee or a Sharia scholar, supervises all business activities and products of the company and certifies the same as Sharia compliant. So the first criteria is they should either have a Sharia board having Sharia scholars who supervise the business activities as well as the products of the company and certify that this is Sharia compliant. Secondly, all the products of the company are to be certified as Islamic, either by an internal Sharia scholar or a board of Sharia scholars or by an external Sharia advisory firm. So apart from the overall certification that this institution is Sharia compliant, there has to be a specific mention that all the products of this financial institution is Sharia compliant. Thirdly, all of its investment as well as non-operating activities of the company should be Islamic. Over here, the Sharia committee is very strict that if you want to qualify as an Islamic financial institution, not only are we looking at absolutely 100% of all your business activities to be Sharia compliant, even your non-operating side activities of the company should also be Sharia compliant. Even your investment side should also be done in a Sharia compliant manner. Because you're saying that you're a Sharia compliant financial institution, all of your activities should be Sharia compliant. Now, the last criteria, I've put this in now, but it has been removed just for the sake of discussion. A lot of people also come back and ask that if a Sharia compliant financial institution is 100% pure, that is all its incomes are Sharia compliant, all its activities are Sharia compliant, it has a Sharia board which certifies and audits it to be Sharia compliant, is it still supposed to pass the accounting base screen? Earlier, this criteria was there that it has to pass all the financial ratios, but recently the Sharia board has come back and said that these companies do not need to pass the Sharia financial ratios and they're exempt from it. This is because of giving incentive and motivation to such institutions that since they are doing all of its business activities in a Sharia compliant manner, they really do not need to pass the financial ratio screens. As an encouragement for this industry, this financial ratio screens has been eliminated. Okay, next is gambling. Okay, all right. Let me see if there are questions coming in. Yes, a lot of questions coming in. Let the questions keep coming in, absolutely no problem. I will answer those questions at the end of the session. You may forget your question by the time I finish the presentation. So just post the question and I will take you through all the questions again. And if required, I can come back to the slides as well. Absolutely no problem. But just post the question over there so that everybody looks at that question. And if you have a counter answer to that, you are free to answer that as well. It's a learning for us as well. So gambling as a business activity is definitely considered non-permissible. All sorts of gambling is considered non-permissible, okay? So lottery and casino operations, online gambling, gambling software developers, betting companies, gambling machine manufacturers, gambling promoters and marketers are considered non-permissible. So it's just not casinos which are non-permissible. It is the entire chain of activities which is considered non-permissible. So a real estate company which has lent out space to a gambling operation, that rental revenue will be considered non-permissible. If you're providing services to a gambling establishment and revenue derived from that will be considered non-permissible. If you are definitely running your own operation of lottery and casinos, entire revenue is non-permissible. If you're running an online gambling operation, it's non-permissible. If you're providing software specifically designed for gambling developers, it's for gambling usage, it's non-compliant. If you're making machines, like in Japan, there are a lot of these machines called pachinko machines. And in every convenience store, you have these pachinko machines. If you're manufacturing those machines, you are also considered, the revenue from these are also considered non-permissible. And of course, if you're running gambling advertisements, revenue from that is non-permissible, and any other activity related to gambling. Now, another very important thing that needs to be considered over here is gaming companies. So a lot of gaming companies nowadays have gambling games. The revenue from these gambling games is also considered non-permissible. Now, another breed of games are which allow simulation of gambling. So it does not necessarily mean that you have to put in real money. Okay, gambling games allow you to put money and then play the game, and you can win big, or probably almost certainly lose everything. But there are these online games available nowadays which involve absolutely no money. You do not have to put in money and gamble. You can gamble with virtual money, which is absolutely something which you get about 100 coins or 2,000 coins, and you just gamble. Now, this is a simulation of gambling, and there is no actual risk or reward out of that. The Shariah committee was asked this question, that is gambling simulation softwares or gambling simulation games considered non-permissible? And they said yes, they are considered non-permissible for the sheer fact that these games are more likely to prepare the user to go ahead and probably gamble in real. So it is serving absolutely no economic purpose. It is serving no entertainment purpose, from a halal entertainment purpose. Hence, even if you do not gamble, even if a game or a product does not involve real money, even if it is virtual money or if it is just a simulation of gambling, it will be considered as a non-permissible activity. And any revenue, advertisement revenue, promotion revenue, fee revenue, whatever the company gets out of these kind of games or activities or products will also be considered Sharia non-permissible revenues. Okay, let's move on to another simpler product, which is pork. Everybody must be very clear as to pork is a non-compliant activity. Let's look at all the avenues from where companies might earn revenue from pork. So business activities which involve breeding, rearing, slaughtering, processing, packaging pork products are considered non-compliant. So there is a whole gamut of industries which could have revenue from pork, right? In addition to the regular suspects, which is retailers, manufacturers, and distributors of food products containing pork, and restaurants as well. So if you are breeding, if a company is breeding pork, if you are rearing pork, or if you're slaughtering pork, or processing it, or packaging it, all of these activities are considered non-permissible. The revenue proportion from these activities will be considered non-permissible. If you are selling products or food products containing pork items, that revenue will also be considered non-permissible. Okay, so restaurants, so the tricky areas over here are restaurants selling pork-based dishes, supermarkets selling fish, selling fresh or frozen pork products, livestock companies dealing in pork-related activities, Animal feed manufacturing companies can also become non-compliant because they may be involved in or they may be dealing in pork-related activities. Here, okay, this is only slide for pork. So in the last point, animal feed manufacturing companies. So manufacturing animal feed is a Sharia compliant activity. You can manufacture feed, animal feed, and that is considered a Sharia compliant activity. But if you are manufacturing specific kind of feed, probably a mix or a, I don't know what protein levels or whatever that is, if you're manufacturing a specific product and market it as a feed for the pork industry, for breeders and rearers of pork, that revenue will be considered non-permissible. Okay. Again, the same principle applies, that if you are specifically manufacturing a product for a non-compliant activity, like for example, rearing of pork, that revenue will be considered non-permissible. Right? Now, there is this other discussion which is quite heated out there in terms of food products which contain pork. All right. Now, the most popular question around this is companies like McDonald's and companies like Domino's. Why are these companies on Islamicly considered Sharia compliant, whereas everybody knows that they are probably selling pork? Again, there are two things in it. The threshold applies and the way the whole product is designed. Now, for example, if a McDonald's is selling a burger which contains a pork patty, right? The pork patty comprises the bulk of that food product. You cannot have a burger and call it a pork burger or a hamburger without the patty in it. So the entire revenue from that will be considered non-permissible. Now, incidentally, McDonald's investor relations says that as a corporate, the purchases, because they cannot disclose the exact information, the purchases of pork vis-a-vis their other purchases of raw materials is less than 2%. Right? We're still in conversation with the McDonald's investor relations team to figure out if there's any other way that we can find out if they're involved in selling pork-based products in excess of 5% of their revenue. It's still a controversial stock, but for the time being, we have kept it compliant because the investor relations has clearly told us that less than 2% of their entire produce is of pork products. Okay. So that's all about pork. Let's move on. Another non-permissible activity is pornography, right? So the entire industry is out. Okay, so let's go through it one by one. So producers of pornography, promoters of pornography, marketers of pornography, publishers of all types of adult entertainment, explicit content are considered non-compliant activities. Secondly, businesses producing, printing, distributing, or marketing pornographic material are considered non-permissible as well. So if you're not producing it, but you're redistributing it or printing it or publishing it, that activity is also considered non-permissible. Thirdly, all of the above activities could be over any media, right? That is, could be print, visual, or audio. So let's say there's a textual context which is pornographic in nature. Okay, that also is non-compliant. And an extension of this also is abusive and offensive content. So let's say there's a content which is non-pornographic or explicit in its nature, but it's very abusive. So there's uses of bad language or foul language, or there is a lot of aggression, or it is very offensive, it's derogatory in nature. Producing of that content is also considered non-permissible from a Sharia screening perspective. So regular suspects over here is online marketing firms, bookstores which sell pornographic material, media firms which has magazines, production houses, sexual content magazines, gaming companies which probably have games which have pornographic material in it, or have abusive or offensive content is excluded. So gaming companies producing such gaming formats wherein the characters may use abusive language or may have sexual themes, such games are usually classified as suitable for adults. Revenue from such games is considered non-permissible. Now, a classic case in point for this is Microsoft. So the research report is available on our blog. I will take you through that research report in this discussion as well. So companies which are gaming companies and producing such games which are marked as for adults, those games are considered non-permissible. So the revenue derived from selling of those games is also considered non-permissible. And definitely cable TV operators are considered non-permissible because they control the content which can be aired on their television network, and they do not stop such content which is for adults. Hence, they are considered non-permissible businesses. Okay, tobacco. Again, the entire gamut of the industries is out. So producers, processors, packagers, retailers of tobacco products are considered non-permissible. So businesses involved in growing, processing, packing, marketing, and retailing of tobacco products are considered non-permissible. Additionally, this is another thing that the Shariah Committee has considered to be non-permissible, and we had a detailed discussion about it with the Shariah scholars, which is companies involved in doing research on behalf of tobacco manufacturers or funded by them are considered non-permissible. So there are these research companies who say that they are going to manufacture probably low nicotine or no nicotine or no tar products which are alternates to tobacco, and market themselves as healthy alternatives to consumption of tobacco. These companies are also analyzed to figure out if they have funding from tobacco companies or they're doing research on behalf of full-fledged tobacco companies. If that is found to be true, then these companies are considered to be non-permissible, because all of this alternate usage, as long as it is a medically certified product, it is considered compliant. If it is non-medically certified product, or it is a recreational product which is an alternate to probably smoking or usage of tobacco, it is considered non-permissible. Simple as that. Thirdly, if a company is into research activities, into finding out cure, into finding out alternate products to tobacco, and they are funded by companies which are getting revenue from tobacco selling, these research companies are also considered non-permissible. The tricky area the companies usually over here are supermarkets selling tobacco products. So a supermarket, if you're analyzing the supermarket, the revenue from selling of tobacco products will be considered non-permissible. Again, if you're analyzing a real estate company which has lent a real estate space to supermarkets, then the area in which tobacco products are stored will be considered non-permissible, and that proportion of the rental income will be considered non-permissible. Secondly, R&D labs involved in tobacco research are definitely non-compliant. If they are producing a medication for de-addiction or something like that, which is certified medically, then it's permissible. For every other recreational use, it is non-permissible. Paper manufacturers selling specialty paper designed for cigarette rolling and filters are also considered non-permissible. So there are a couple of listed companies in the West and even in the emerging economies which manufacture paper. And that paper is a specialty paper used by tobacco industries for rolling of cigarettes or manufacturing of cigarettes. That paper manufacturing process is also considered non-permissible. Manufacturing of e-cigarettes, like for example, you have this hot company called Juul, which is into e-cigarettes, right? So it doesn't use any tobacco, but it gives you the feeling that you're smoking up tobacco. This is also non-permissible because the Sharia scholars say that this is a vice. Okay, hence this should not be promoted. In the absence, and the Sharia scholars also give a reason that, let's say for example, you do not have access to an e-cigarette, what are you going to do? You're going to pick up the original cigarette and smoke it up, right? Hence, these e-cigarettes are not helping the cause, and hence manufacturing of these e-cigarettes is also considered non-permissible. Okay, let's get to advertising, okay? Right. Now, advertising as such, okay, is a Sharia permissible activity. That means if you are producing some advertising content, it is absolutely Sharia permissible to produce Sharia advertising content. But as we know the world, the advertising content usually is non-permissible. Hence, revenues of those companies or companies from advertising services is considered non-permissible, but it is definitely looked into case by case. All right. So the tricky areas are if you're advertising, if you're advertiser of pork, alcohol, gambling, tobacco, and all other non-Islamic activities, whether you use Islamic tools or not, if you are advertising for pork, alcohol, gambling, tobacco, and other non-Islamic activities, revenue from that services is considered non-permissible. So producers, designers, broadcasters of non-permissible advertising content, revenue from that segment is considered non-permissible. Textual advertising. Okay. Now, if you like, for example, Google and Google advertisements, right? If you go on Google or and search for something, you get an ad on top, and that's textual in nature. That advertising is perfectly permissible. And in addition to that, digital ad exchange platforms like Google digital ad exchange platform, and there are many more. So there's an MSN platform, there's a Yahoo platform, there's a Google platform, there's a Facebook platform, there's an Instagram platform nowadays as well. To the Twitter ad exchange platform. These ad exchange platforms are considered Sharia compliant because of a couple of reasons. The first thing is since they have an ethical filter to themselves. Secondly, they do not produce any content. Thirdly, they reserve the right to bring down any sexually explicit content. And they do not control the amount of content which goes into it. Hence, they are considered as a Sharia compliant ad exchange platform. Please do read our research report that we have published about such companies on the blog as well as on the article section of the app to get more details. All right. The other non-permissible activity in the entire Sharia equity screening scheme of things is media and entertainment. So producers, distributors, and broadcasters of music, movies, television shows, and musical radio shows, cinema operators, gaming, having adult themes is considered the non-permissible. An exception to the general media rule is animated films and media content producers and distributors are considered compliant. So if you're producing an animated movie or animated content, it is considered permissible. Okay, there is a typo error. It's called news media, not new media. So if you're in news media, although a lot of news media nowadays is spreading propaganda, but we've got to be non-political in our assessment. If you are classified as a news media agency, it is considered compliant business activity. Again, since music, movies, and such kind of activities are considered non-permissible, when you're analyzing a supermarket or a retail store or a convenience store, you've got to also look at the revenue that they get from selling of these music and film CDs or DVDs. That proportion of revenue is also considered non-permissible. All right. This brings us to the last criteria, which is a unique criteria to what Islamicly follows, but a lot of some other people also do follow this criteria, is trading of gold and silver on a deferred basis. Okay, let me read through this and then I'll explain you a little bit more. From the viewpoint of Sharia, gold and silver are a medium of exchange. That is, they are like currency, and as such cannot be sold forward. Although the primary business activity of gold/silver mining companies does comply with Sharia principles, these companies are not permitted to sell their gold/silver stocks forward for hedging purposes. Okay, the lookout for I'll tell you later. So selling of gold and silver. So companies involved in trading of gold and silver, companies involved in manufacturing of jewelry out of gold and silver, companies which are involved in exploration of gold and silver, trading companies are considered Sharia compliant activity, right? But if these companies are involved in hedging their gold production or are involved in futures contract of their gold or silver, then the revenue from that specific hedged gold is considered non-permissible. This is because it is considered as a medium of exchange and it should be traded on spot. So gold and silver should be traded on spot. Similarly to currencies as well, it should be exchanged or traded on spot. If you are trading in these things apart from spot, it is considered non-permissible. So a lot of gold mining companies especially are likely to hedge their production of gold, because when they get the mining contracts, to the time they get to production or they get actual gold in their hand, there's a big time lag. So what they do is when they win the contract, they see the price is good today and they get into a contract with a buyer saying that I will deliver upon to you these many ounces of gold or silver and I am fixing the price of it right now. That is not allowed. That is non-permissible. So a lot of good mining companies, especially in Canada, Brazil, Australia, become non-compliant because they're involved in such activities, which is hedging their production. A specific example I wanted to bring out over here was exploration stage companies. So as I said, that when you enter into, when you win a gold mining contract, you will not get revenues instantly out of selling gold and silver or your precious metal or your precious commodity instantly. So even if you have zero revenue from selling of gold or silver, but you have already hedged your future production at a specified price now, you will be considered non-permissible. So that company will be considered non-permissible. So that brings us to the end of the business sector screening. Any of the activities which are part of this, any of the companies involved in this, it may not be as simple as a lot of people might think. A company might look one way, but it may have revenues from the other. Hence, we've got to be very careful in terms of looking at every revenue item individually, studying every company individually, and figuring out if they derive revenue from any of these activities. Now, moving on, there is a threshold as well. Okay. Now, all of these non-permissible activities can be identified in a company, but if the revenue from these non-permissible segments or activities is less than 5% of total income of that company, then that company is considered to have passed the sector screening. That means there is a tolerance limit. If a company gets less than 5% of its revenue from any of the previously discussed non-permissible activities, the company is still considered to have passed. Okay. Now, this non-compliant activities should be from its operating income. Now, what is operating income? Operating income is essentially that income which is principal activities of the business. Okay, so if a company is deriving revenue from sale of alcohol or pork, if it is involved in that business, then the revenue from such activity is considered as an operating activity. A classic example is interest income. If a company is a conventional bank or a conventional financial institution and they lend money on interest, that becomes a primary business activity and they earn interest. This interest income becomes their operating activity and hence considered as non-permissible activity, as well as considered in this 5% threshold. But if a company is probably, let's say, for example, selling oranges, okay, I have discussed it over here. But if the company is doing a permissible activity but gets non-compliant, non-permissible revenues from a non-operating activity, that is an activity from which is incidental to the business, or it is something which accrues to the business without an active participation of the management, is considered non-operating. So for the threshold and non-permissible activity, deriving non-permissible revenue should be from an operating activity of the business to be considered as part of the 5% threshold. Okay. Now, why is there a 5% threshold? Why can't we just screen out all the companies which are involved in these kind of activities? Okay. Scholars agree that there should be absolutely no tolerance. But if you look at global companies, it is very difficult to have a huge universe or a sizable universe of companies which have absolutely 100% revenue coming in from Sharia compliant activities. There are very few companies in the world. So that would ultimately die down the entire investment opportunity for Islamic investors. Hence, the Sharia scholars give permission that there can be a 5% threshold for non-permissible revenues. Okay. Now, there's another thing that the Sharia scholars believe, that the scholars believe that a negligible amount of impure income / activity does not make the whole activity non-compliant. You got the point? So if a company is getting less than 5% of its operating income from a non-permissible activity, then 95% is a good revenue. So it does not taint the entire company, because the entire company is largely of a compliant activity. Hence, this tolerance is also permissible. Now, another interesting question that we always get is, does this 5% threshold include interest income? Okay, let's look at that question. For sector compliance, all operating non-permissible incomes are considered, as I have said earlier as well. For example, if the company is doing business of interest-based lending, then interest income is operating in nature and will be included in the 5% threshold. Okay, but if the company is selling tires and gets interest income from its cash deposited at bank, then this interest income is non-operating in nature, hence not included in the 5% threshold. All right. You will have a lot of questions about this. I will discuss more on this as we go along, because this is also related to the financial ratio screening. So essentially, if there's interest income which is operating in nature, it is included in this 5% threshold. If it is not operating in nature, it is not included in this threshold. Let me go ahead and clarify a little bit out here, saying that in the current financial environment that we live in the current setup of the economies and the banking system, even if a company gets 100% of its revenue from a compliant activity, let's say, for example, in this given scenario, if you're selling tires and you have absolutely no revenue from anywhere else, but by virtue of doing business, you will collect monies into a bank account, and that bank account, by virtue of its policies, will or is likely to pay out interest. Right? The interest will accrue to you. You cannot run out of it unless and until you have access to Islamic banking facilities globally. Unfortunately, that is not true everywhere in the world. Although Islamic banks are coming up, alhamdulillah, there are Western countries where Islamic banks are also available. There are, yes, in the developing economies also Islamic banking is coming up. But in majority of the scenario, in international trade especially, there is a very little scope or availability of Islamic banks. So by virtue of doing a halal business also, you may get interest income, right? Now, this is out of your control. It's non-operating in nature. Hence, the Sharia scholars say, to decide whether a company's business activity is Sharia compliant or not, we should not account for non-operating incomes. Where the effort of the management has gone, where they've consciously made an effort, consider those incomes to be part of the sector screening criteria. Clear? Let's move on. Now, if a company gets less than 5% revenue from, as we said over here, revenue from these non-permissible segments should be less than 5% of total income, the company passes the sector screening criteria. Once the company passes the sector screening criteria, you will have to apply the financial ratio compliance. Okay, let's look at the time. It's already 10 o'clock. It's already 1 hour. Financial ratio compliance is of 3 parts. So there's debt ratio compliance, cash ratio compliance, and accounts receivables ratio compliance. Let's discuss this in detail in just a bit. I hope all of you are posting questions. Let me have a look at the questions, if they're coming in or not. Okay, yes, there are tons of questions. Okay, let me hurry up with the criteria and come back to you on this. Okay, cool. Let's continue. Let me share my screen. Yeah. So there are 3 areas of debt ratio, which is debt ratio, cash ratio, and accounts receivables ratio. Let's look at this in detail. Financial ratio compliance, which is essentially measuring the amount of debt a company has vis-a-vis its market capitalization, right? Yes, Islamicly screening criteria uses the market value of equity as a threshold. It's a benchmark for measuring the debt levels. So the debt to the total market capitalization, which is again a 36 months average, should be less than 33%. Okay, let me analyze this in detail. Before I move on, a lot of people might ask us a question that why are we using market capitalization as a threshold rather as a benchmark rather than the total assets, which is real, which is actually in the books of the company, right? And the real value of the company in some people's view is the total assets of the company and not the market value of the company as calculated by total number of shares multiplied by the price of that equity. There is a specific article on our blog which compares what and why market capitalization is a better parameter. What are the Sharia scholars think about market capitalization as a parameter compared to total assets? The key things over there is market capitalization considers a lot of things which may not be available on the balance sheet of the company. Let's say, for example, the goodwill of the company, right? The anticipated earning nature of the company, which has to be implicit into the value of the company. Thirdly, the scholars feel that the chances of manipulation of market cap is less than total assets by the management itself. Okay. Now, a lot of people might not agree to this, saying that stock prices can be manipulated, right? Now, I agree to that. Stock prices can be manipulated, but in a smaller setup. I mean, you can't go ahead and manipulate the stock prices of probably a stock like Apple or Facebook, right? Because it's massive. Millions of people have equity shareholding in that. You can't control their behavior overnight. Apart from that, financial regulation has become quite stringent. I wouldn't say that it has become perfect because still you have these Lehman kind of issues coming up. But financial regulation, the regulators have such set of laws and checks and balances in place that do not allow stock prices to be manipulated very easily, right? Hence, the Sharia scholars say that market capitalization is a better parameter to measure the financial ratios of the company. A lot of Sharia screening criteria, okay, a lot of Sharia boards which had given out a Sharia screening criteria to measure stocks or the financial compliance on total assets have in the past 5 to 10 years moved from total assets to market capitalization, because they have also appreciated that market capitalization is a better parameter to assess the compliance of equities while screening. For a very, very detailed analysis, please do read the article that we have on our blog, which is titled Market Capitalization versus Total Assets. It is also available on the app for a read. So here, the first ratio that has to be calculated is the debt of the company should be less than 33% of the 36-month moving average. Now, again, in the same vein, why is there a 36-month average? Is to avoid fluctuations, is to avoid sudden dips and rises in terms of Sharia compliance of stocks. Hence, a more stable 36-month average has been taken. Now, in this, what kinds of debt are considered? So only interest-bearing debt is considered. The Sharia committee says that the interest-bearing debt of a company should be restricted to less than 33% of its total market capitalization. If a company has non-interest-bearing debt or it has Islamic debt, these things should be excluded from the total debt calculation. All right. What else are the tricky areas over here? If there are any, please do post a question and I'll definitely answer that. The second ratio is the cash ratio. Okay, before that, before we move on to the cash ratio, you might have a question is, why is there a 33% tolerance to this, right? Why not a 0% tolerance? Why is any company which is classified as Sharia compliant having debt which is interest bearing allowed to pass the screening criteria? Okay, even if you say that, okay, fine, debt, interest-bearing debt is something which is part of the entire financial system. There are hardly any Islamic banks in the world. Companies are bound to get leverage, which is interest-based. When for sector compliance, you are saying that 5% is the threshold. Why is the threshold over here 33%? Why can't it be 5% over here as well? Right? This, the Sharia scholars say, financial ratio screening is an indirect screening, so that this we make the entire Sharia equity screening criteria more and more robust. If you see, initially, when the Sharia screening criteria was developed, it was done only based off sector screening. There was no financial ratio thresholds. There was no application of financial ratios. It was in 1999 when the Dow Jones Islamic Market Index came into place, and I believe Mufti Taqi Usmani Saab was part of that committee as well. They came up with a criteria saying that why are we ignoring the debt component, which is interest-based components, or other interest-based or interest-earning components of a company while assessing Sharia compliance. So it was only about 98, 99 that the financial ratio screening was incorporated into the entire Sharia equity screening space. Now, in terms of revenue, the 5% threshold is taken into account because of the paradigm that a negligible amount cannot overpower the entire amount. Hence, it was considered, the Sharia scholars considered that 5% is a negligible amount, in the sense that a company involved in a business activity, if it gets majority of its revenue in a Sharia compliant manner, then a small part can be ignored. Hence, now if a company gets 95% of its revenue from Sharia permissible activity, it is considered compliant from a business sector perspective. Over here, the threshold is higher, taking into account another paradigm which says that since it is not direct, it's indirect. The paradigm which is considered over here is that a third is considered to be a lot. So you should not exceed a third of your market capitalization in terms of your debt, which is interest bearing. Now, the ratio over here is not interest expense that you're paying to 33% of market capitalization. No, it is the entire debt value. So the interest that you pay on this is way lower. It's not 33% of your company's market capitalization. So that's what the Sharia scholars say. They allow a third of a company's market capitalization to be derived from its debt that it has taken, which is interest bearing. If it is non-interest bearing, it is not considered. It is not considered in the ratio. Definitely, Islamic debt is also removed from the ratio. Let's move on. Then there is cash compliance ratio. So the Sharia scholars also say that a company should not derive its market valuation in excess of 33% basis its cash and marketable securities. Now, this is a very interesting thing. If you consider this in light of the 5% threshold, okay, that is the interest income threshold. Now, let's look at this plane and then let's look deeper into it as we go along. So the cash compliance ratio that the company has to pass is if a company has cash in hand, cash at bank, any short-term or near cash items, that is liquid securities or liquid assets, all of this combined should be less than 36-month average equity of the company. Sorry, should be less than 33% of the 36-month average market value of equity. That is, cash plus interest-bearing securities should be less than 33% of the company's market valuation. The market valuation or market capitalization is a 36 months average. Over here, all of the cash is considered, whether it is interest-bearing or non-interest-bearing. Okay, all liquid assets are considered, such as short-term investments. Any of the equity investment that the company makes is considered for calculating this ratio. What the Sharia scholars mean by this is that if a company discloses that they're going to make tires, and if they have cash, they should invest this cash back into probably more facilities, more retail services, or in their business activity. Why are they keeping cash in a non-operating activity? That is, not investing that cash back into the company's operating, disclosed operating activities. But yes, as part of cash management principles, as part of contingency policies, and as part of good, prudent financial management practices, companies should maintain some cash. In light of that, 33% is allowed. If you breach this 33%, it's akin to having cash. That means a majority of your, or sorry, not a majority, a lot of your market capitalization is coming in from cash. Okay, then the rules of SARF, again, which is trading of gold or trading of cash or trading of currencies, is applicable, wherein only spot basis trading is allowed. Whereas equity trading happens at a premium to the face value. It is allowed. This, if a company has more than 33% of its market valuation coming in from cash, then it will not be considered as the rules of equity trading will not apply. The rules of SARF will apply. Hence, this ratio has been included as a threshold. In addition to that, in addition to this ratio being applied, this is also a netting ratio for the interest income. If a company gets a lot of interest income, that means it has a lot of cash or a lot of cash in liquid assets. Hence, it is getting a lot of interest income from non-operating activities. Okay. If there's a lot of cash and a lot of liquid assets which are interest bearing, and if that portion is more than 33%, the company will automatically fall off from the Sharia screening criteria. So the possibility of many companies having a higher interest income from non-operating activities is low, because they are more likely to fail this ratio. Hence, it is a balancing ratio. So the Sharia criteria is a holistic kind of a view between the operating incomes, the interest income, operating income, and non-operating interest income, as well as this cash ratio. If you see all these three in tandem, it will all make sense now, because it will answer your question that companies having excessive interest income above 5% are also Sharia compliant. Yes, they may be, because that is non-operating. If the non-operating interest income is very high, it is because it is coming in from this ratio. And if the company valuation is very high, then that the company will pass this ratio. If the company's valuation is low, it will fail this ratio. Simple as that. This is another ratio which our Sharia committee believes in. Although a lot of other Sharia scholars may not follow this criteria, which is the accounts receivables ratio. Here the ratio has been kept very high. to about 49%. The principle over here is that if a company has having more than 50% or about 50% of its valuation coming in from such assets which it has not realized, okay, then it is not advisable for Sharia compliant investors to invest in these companies. Hence, if a company fails the accounts receivables ratio, if it has more than 49% of its accounts receivable to its market capitalization, the company is considered non-permissible. A very few companies do fail this ratio. The companies which do fail this ratio are actually contracting companies which are involved in government contracts. So they may have a cash flow mechanism coming in, and hence they have some valuation, but the receivables is very high because they're involved in government contracts, and getting monies out of government contracts is usually delayed. So these are the three ratios. The three ratios are debt, cash, and accounts receivable. So if a company passes the business sector screening, that is, it has non-permissible incomes less than 5% of its total income, and passes the three ratios, it is then and only then that a company is considered as Sharia compliant. Don't worry about all of this. Islamicly takes care of all of these things for you. Now, a very, very brief mention of dividend purification. And then we will do a practical example as to how do we screen companies. Okay, so dividend purification is, as I've been saying, that 5% threshold is allowed while passing a company from a business sector perspective. That 5% or less than 5% of whatever is the impure income has to be purified. Okay, so the percentage of all non-permissible income that I've highlighted and I've made it into caps, that all non-permissible income of the company to its total revenue is calculated. Okay, this ratio has to be applied on all dividends received from the company. So before I move on to what the application of it, if a company is getting non-permissible income from operating activity, non-permissible income from non-operating activity, irrespective of wherever it is getting non-permissible income, all of that is added up, divided by the total income of the company. That gives you the dividend purification ratio. So here, all the non-permissible incomes of the company are included, irrespective of whether it's active, non-active, one time, or whatever it be. And hence, this ratio is calculated. So when you receive a dividend from the company, you need to apply this ratio, and the resultant amount needs to be purified. That means it has to be donated to charity. Okay. Now, this is applicable only on the dividends received from the company. It is not applicable on the capital gains. If I have to show you, we have a blog on Islamicly which talks about the Sharia compliant of the purification amounts, how it has to be done. Please do read this. If you need to find out how it has to be done on the app, there's a video over here as well. All right. So the purification has to be done only on dividends. The reason for this is that once a company is classified as Sharia compliant, it is classified as Sharia compliant. If you trade in that and you get trading gains, it is considered compliant. All the trading gains are considered compliant, and no purification has to be applied on it. Okay, but if you receive dividends from the company, so the dividends that the company pays is from its profit. That profit has been derived from, has a component of non-permissible incomes as well, whether operating or non-operating, and a portion of that has come to you because you are a shareholder. So what proportion of the dividend that you received is comprised of these non-permissible incomes or impure incomes? That is the dividend purification number or the ratio. Apply that and purify it. Hence, the trading gains become halal. The dividends that you receive also become halal because the component of impure income is what you have been able to remove it. It's pretty simple. The details are there on that blog. There's a video as well on our YouTube channel, Islamicly. The rationale has also been explained over there in detail with an example. There are a couple of questions around dividend purification. There's a webinar which has been conducted earlier on dividend purification earlier. Please go look at it on our YouTube channel. It should be available by now. If not, it will come up very soon from our production teams. Don't break your head over dividend purification, but any screening provider that you follow, if they are not providing dividend purification, okay, then you've got to be careful. Because dividend purification is the process of identifying the impure incomes or the non-permissible incomes from the company, which is a very difficult task. And it is a manual process. There is no Shariah Equity Screening classification which is complete without a purification. Every stock has to have a purification number. If you are saying that the argument is very simple, it's the same argument that if a company passes a sector screening, can I invest in it? No. Company has to pass the financial ratio screening. In addition, if you have invested in a company which has passed the financial ratio screening as well as the business sector screening and is classified as Shariah compliant, you will have to apply the purification ratio on the dividends that you receive for your entire trading activity to be Shariah compliant. Purification is an important part of halal trading. So hence, for every stock that you invest in, please do check the purification ratio before investing in it. Because if you get the dividends out of the purification ratio is pretty high, your returns on investment is going to be low. So purification is an integral part of halal investing in equities. So please be careful. Whichever screening provider you follow, they need to give you a purification ratio against every stock. Okay, now let's see how screening is done. We have put up Amazon on the portal itself. Okay, I will go through this very, very slowly. Before that, let me have a look at where are we with the questions. Okay. All right. Couple of good questions have come in. Keep putting the questions up. Inshallah, we'll answer all of them. Yep, we have another half an hour to go before we finish this webinar, and I'm almost done with the stuff that I had to talk about. Now, this is a practical example of how a screening is done, and we've put this up. And inshallah, going forward on a daily basis, we'll keep publishing such kind of reports for you to understand and appreciate how Islamicly does screening and to what detail do we go. Okay. Now, Amazon as a compliant, we published this report on 9th of July, and it is Shariah not compliant. Okay. A lot of people might be wondering, why is Amazon non-compliant? What does it do? It's an e-commerce website. It has retailing as a business product. Why is it non-compliant? Let's look at that. Now, as I said, there is no compliance status which is complete without the dividend purification ratio. We have used a short form over here. DP ratio means dividend purification ratio. I'll just expand this a bit just in case some people might not be able to see it clearly. Okay. Now, we've given a report on the business sector screening. The first level is business sector screening. So let's read this. Amazon.com Inc. offers a range of products and services through its online portals. The company's products include merchandise and content that it purchases for resale from vendors and those offered by third-party sellers. It also manufactures and sells electronic devices. The company derives revenue from 5 business segments. Okay. So the company is an online portal. It's an e-commerce portal. It buys and sells goods, or it provides a platform for sellers to get in touch with consumers. And that's about it. So it's a technology company. So what can go wrong in this company? So let's analyze its revenue segments to find out what can go wrong in this company. So as you can see, the company derives revenue from 5 business segments. In summary, 2 of these business segments consist of non-permissible activities which contribute more than 5% of the revenue of Amazon. That is the problem, correct? Now, what is that problem? So problem number 1 and problem number 2. Let's see problem number 1. So the company derives revenue from a segment called physical stores. Okay, in the physical stores, it has recently acquired a company called Whole Foods, which is a supermarket chain, right? So its Whole Food segment has sales from alcohol, pork, and tobacco. Wow, you got it? The second portion of the problematic revenue that Amazon derives is subscription services, okay, which includes revenue from the annual and monthly fees associated with Amazon Prime memberships, giving access to non-permissible general entertainment content, digital video, music, and other non-AWS subscription services. So the company says that it has 5 revenue segments. Out of the 5 revenue segments, basis the Shariah Equity Screening criteria, we have figured out that 2 of its revenue segments, that is physical stores and subscription services, have a problem. The physical stores, the problem is Whole Food segments. This Whole Food segment, which has revenue from alcohol, pork, and tobacco, and its subscription services has a problem because that is where the revenue from Amazon Prime is given. Amazon Prime gives you access to general non-permissible entertainment content, which is non-Shariah compliant because it fails the media and entertainment screening criteria. People might wonder that Amazon Prime gives you same-day delivery. Okay, yes, that is the additional benefit of it. Okay, Amazon Prime is essentially the television or the OTT platform. Okay, that is the main revenue that they get out of it. When you subscribe to that, you get free delivery or same-day delivery on Amazon products. It's not the other way around. So the bulk of the crux of Amazon Prime is the television content. Let's look at that detail. So having said this, to give you an instant answer, we believe the above non-permissible revenue is more than 5% of total revenue of Amazon. Hence, the business sector seems to be non-compliant, right? Now, how did we arrive at all of this? Okay, let's look at it in detail. So let's look at the segment breakup. So let's look at the operating revenue of the company, which is in millions of US dollars. So with the segment description over here, what is the revenue out of it? Is there a non-permissible revenue out of it? If yes, what is that percentage? What is the issue in that non-permissible segment? And what are the comments of the research team? So we published the entire thing for your benefit so that you can have a look at it, completely transparently giving you as to how Islamicly does the screening. So we've got 5 segments in the company. So 1, 2, 3, 4, and 5. So 1, 2, 3, 4, 5, 6. Oh, sorry, there's 6 segments. So there's a typo error over there probably. So there's 6 segments of Amazon. So online stores, the revenue is, wow. The revenue is, this is in millions of USD. So it's 141.247 million, sorry. 141,247 million USD is the revenue from online stores, which we believe is permissible. There is no explicit mention of any non-permissible activity going on over there. Yes, we do believe that there are certain non-permissible things which could be sold on the online store, but we don't have revenue breakup out of that. The physical stores, okay? So the physical stores get 17,192 million US dollars as revenue. Out of that, we believe 5% will be sales from alcohol, pork, and tobacco, because its Whole Foods segment has sales from alcohol, pork, and tobacco. Hence, the 5% of 17,192 million is 859.60. The third-party seller services seems to be compliant revenue activity. Then comes subscription services, from where the company gets $19,210 million. That is $19.2 billion. We believe all of this is non-compliant because we believe the bulk of the service is actually adult entertainment, which is the non-permissible income segment. And the description, Amazon Prime membership containing digital video and music content. Yes, a part of this is also collected as part of a free delivery service or same-day delivery service by Amazon. But if you analyze the entire way as it has been structured, Amazon Prime membership is essentially the entertainment division of Amazon. Then Amazon has AWS, which gets a $35 billion in revenue, which is compliant with the server services. Advertising services and others, although advertising is a non-compliant activity, remember I had mentioned to you clearly that it has to be subjective. Over here, as you can see, it is not any third-party advertising services. It is not an advertising producing agency. This is cross advertisement that sellers put on the Amazon platform to sell its own internal products. Hence, we believe that this is a closed loop advertising service. It's mostly about promoting a product on top of your list or showing the same products on the Amazon marketplace higher or giving you more exposure to a particular product. These kind of advertising services, since advertising as a business activity is compliant, and this does not involve any of the non-Sharia visuals, it is considered Sharia compliant. Hence, we have written a note as well. The advertising services are for the in-store products, so seem to be compliant. Now, given the non-permissible activities of Amazon, which is $859 million and $19,210 million, it comes up to $20 billion. Over $280 billion, it becomes 7.15%. Hence, it breaches the 5% threshold. It is also given over here. So total revenue is 522 million. Non-permissible operating revenue. Okay, please be aware of this operating revenue. So all of this is operating revenue of the company. All of this, it becomes $20 billion. So percentage of non-permissible revenue is 7.15%. Hence, the company fails the sector compliance. This is how Islamicly figures out whether a company passes the sector screening ratio or not. Now, let's go ahead and also analyze the non-operating revenue of the company. So the company's non-operating revenue consists of interest income, which is $832 million, other income, which is 203. We've seen the components of other income. It doesn't consider any of the non-permissible activities, hence it's fine. The interest income is definitely non-permissible, hence it is we put out in the non-permissible column. Percentage is 100%. What is the reason for non-compliance? It is because it is interest income, and the comments is it's non-operating interest income. So let's figure out the dividend purification. All right. So as you can see, the non-permissible operating revenue is $20 billion. Where did this figure come from? Let me go up and show you again. It came from here, which is essentially the non-permissible operating income from the company's business activities. So that is considered. Yeah, it's considered the non-permissible non-operating revenue. Where did it come from? From non-operating activity. So the non-operating revenue of the company, we believe $832 million is non-permissible, and that is put up. Okay, so the total non-permissible revenue is this plus this. It becomes $20,901.60 US dollars. The total revenue of the company is 281,557.00. How did this number come up? It is 1035 plus 280,522. So all the incomes are added up, operating as well as non-operating. That becomes the denominator. That becomes the denominator. The numerator becomes all the non-permissible activities of the company and the revenue derived from it. So operating and non-operating, this is the total. Hence, the dividend purification ratio becomes 7.42%. And that's the ratio that has been mentioned over here. Although if a company is non-compliant, dividend purification is not applicable. because you are not allowed to invest in that company. So there is no question of getting dividend from that company. All right. Although the company has failed the business sector screening, this is also written over here. This will not be displayed in Islamically. The sector of the company is non-compliant. That is, investment in the stock is not permissible. Hence, dividend purification would not be applicable. All right. Now, since all the ratios are within the limit, the stock passes the financial ratio screening. Let's look at that in detail as well. So, as you can see over here, this has been taken. The operating revenue of the company has been taken for. It's not written over here, but it is taken for the annual. So this is taken for 31st of December 2019, which is the annual numbers. In the annual financial report, such kind of detailed breakup is mentioned. But for financial ratio screening, the latest available financial number is taken. So while we were doing this on the 9th of July, we found out that on 31st of March 2020, the company has disclosed a quarter number, and we have taken that. So on 9th of July, the average market capitalization of the company was 829 218 millions of US dollars. So it becomes $829 billion. The total debt of the company was $39.9 billion. It doesn't have any Islamic debt, unfortunately. Hence, the adjusted debt is $39 billion. It becomes 4.82%. So as you can see, the company has a massive amount of interest-bearing debt. That in itself, on a standalone basis, is massive. But you compare it to its market capitalization, it becomes just 4.82%. And it is definitely within the limits. Hence, the company passes the debt ratio. Similarly, for cash, the company has $49 billion in cash. And it becomes 5.94%. Hence, it's within the limits. The company's receivables are $17 billion. And that becomes 2.15%. So that is 17,839 divided by 829,218. It becomes 2.15%. So the company passes the, since all the ratios are within the limit, the stock passes the financial ratio screening. But the stock fails the business sector screening, passes the financial ratio screening. It means the stock is still Shariah not compliant. This is how screening is done by Islamicly. Let me go through very, very quickly about Facebook. Similar stuff. So Facebook report was published by us on 23rd of July 2020, and Facebook is Shariah compliant. Regarding the sector screening, there's a detailed report as well, but let's look at it over here itself. So Facebook Inc. is a social media and social networking company based in the United States. Among the notable brands, the company owns Instagram as well as WhatsApp. The company derives its revenue from two major segments. Advertising consists of advertising revenue generated from Facebook, Instagram, Messenger, and others. Other revenue consists of revenue generated from delivery of consumer hardware devices, etc., etc. The tricky areas are definitely advertising. Over here, I'll highlight it for you. Okay. The kind of advertising services provided, that is textual, pictorial, and marketplace model with controls or generic advertising properties. And the content. A lot of people have an issue which says that Facebook has a lot of non-permissible content. So we've picked that up as a tricky area. So the content displayed on platforms owned by Facebook, such as Instagram, WhatsApp, Facebook, could be non-permissible. So let's analyze them. Regarding the advertising platform of Facebook, this is what we have found out. So Facebook does not produce any advertising content of its own. Facebook has a controlled ad publishing policy which prohibits 30+ areas such as illegal products or services. Okay, let's come again. Tobacco and related products, drugs and drug-related products, adult products, pornography, weapons, etc. A full list is also available over here. So let's look at this list. It will give you what all things are not permissible on Facebook. So that will give us an understanding as to why we believe Facebook This is the prohibited content. So if you violate any community standards, illegal products or services, discriminatory practices, tobacco-related advertisements are not allowed, drugs are not allowed, unsafe supplements not allowed, weapons not allowed, adult products or services not allowed, adult content is not allowed, third-party infringement is not allowed, sensational content not allowed, personal attributes, misinformation, controversial content, non-functional landing page, cheating and deceitful practices, grammar and profanity, non-existent functionality, personal health, pay loans, multi-level marketing, couple of stuff. Lots and lots and lots of stuff. Prohibited financial products and services, sale of body parts. Okay. In addition to this, alcohol advertisements not allowed, dating advertisement not allowed, gambling not allowed, lottery not allowed, pharmacies not allowed because of control between restricted drugs in the US. Financial and insurance products and services. All of these have a basic level of filtering over here. So drug and alcohol addiction treatments are not allowed as well, because they need to figure out whether it's legitimate or not and stuff like that. In their video ads, they also tell us that entertainment related restrictions, that is drug and alcohol use not allowed, adult content not allowed, profanity, violence and gore not allowed. Doesn't it sound like Sharia compliant advertisements? It does, right? Hence, we have considered Facebook's revenue from advertisements as to be Sharia compliant. Regarding the content displayed on Facebook and Instagram, this is what we have. Okay, I don't want to bring man. Let's read this. So regarding the content displayed on Facebook, and Instagram, etc., Facebook does not control the kind of content displayed. The content is owned and displayed by users. Hence, Facebook provides tools for sharing content and hence has no say over what is being displayed. Secondly, it has ethical restrictions. So Facebook has a policy of removing content such as nudity or other sexually aggressive content, hate speech, fake content, etc. Hence, the content on Facebook has a permissible use as well. Hence, the Sharia committee believes as a product and as a technology provider, its products are Sharia compliant and cannot be removed on the basis of the content that is published over there currently. So given the above restrictions, it seems there can be a positive Sharia permissible usage of Facebook in its products. Okay. Now let's look at the revenue. So we've analyzed the revenue, the segment revenue breakup for 31st December 2019. Similar stuff, advertising. As I've mentioned earlier, the company's advertising policies and advertising content is subject to various regulations. Hence, the revenue from this segment is considered permissible. For reference, you can go to the same link. And Facebook gets $69.6 billion from advertising revenue. Their other revenue is about $1 billion. We analyzed this and it was found okay. And then there is an affiliate fee that they get from Google network members' properties, which also looks Sharia compliant. So of the $92.2 billion of revenue that Facebook gets, nothing is explicitly non-permissible. So of total revenue is $92.2 billion. Non-operating revenue, which is non-permissible, is 0. Hence, the percentage of non-permissible revenue is 0%. But that does not mean the dividend purification is 0. Let's see what is the dividend purification. It's still 0.99. Where the freak did this come from? Let's analyze that. So now to do that, we'll have to analyze the non-operating income of the company. Before that, let's read the statement. Since revenue from non-permissible operating income of the company is less than 5%, Facebook Inc. passes a business sector screening. So the sector compliance is a pass. Cool. Let's look at the non-operating revenue. The company gets interest and dividend income of $924 million. Definitely non-permissible. 100% of it is non-permissible. The area of concern is interest income. Other income is it gets about $27 million from some other stuff, which doesn't have much of a breakup on the financial statements. So we consider this as Sharia compliant. So out of 951 total non-operating income, 924 is non-permissible. So let's see the dividend purification calculation. Non-operating revenue, non-permissible operating revenue, as we saw, is 0. Non-permissible non-operating revenue, as we saw, is 924. It's here, just here. Over here, can you see? So the total is 924 itself. Both these revenues have to be clubbed The total revenue of the company, that's 92,244 plus 951 gets us to 931,195 millions of dollars. Yes, so it's $93 billion. And if we divide 924 million on 93 billion, it is 0.99%. So if you get dividends from Facebook, which I don't know when we'll get, you need to purify 0.99%. If you make capital gains by trading Facebook stock, it is completely Sharia compliant. Let's look at the financial ratio screening. Does it pass that? The company's valuation as on the date that we published was on 23rd July. The 3-year moving average market capitalization was 519 billion 942 million US dollars. Okay, that is 519,942 million US dollars. The total debt was $470 million. Hence, the company's debt is just 0.09%. It has massive amounts of cash, but still it is just 11.6%. It has some receivables, which is $7 billion, and it's just 1.4%. And since all the ratios are within the limits, the company also passes the financial ratio compliance. Hence, Facebook Inc. is a Sharia compliant company. This is how we do screening. Okay. Now let's move on very, very quickly to the differences in Sharia criteria and why you might be referring to different apps and they give different results. The essential part over here is there might be different Sharia screening criteria. Inshallah, in some of the webinars in future, I will tell you the screening differences and the differences in the screening criteria between these two, between all of these major service providers. So S&P has a Sharia criteria, Dow Jones has a Sharia criteria, MSCI has a different Sharia criteria, FTSE and AOFI. Of that, S&P, Dow Jones and AOFI are using market capitalization, whereas MSCI and FTSE are using total assets as their denominator for financial ratio screening. In terms of sector screening, is almost the same. Let's go on to a final segment over here. So is Islamically Sharia criteria credible? So very, very quickly, although I discussed this in the last webinar, I'll go through this quickly. Islamically is backed by the most credible Sharia scholars who are considered pioneers in Islamic finance. All processes and research methods are discussed and approved by the Sharia board. The research team has, alhamdulillah, 20 years of experience in Sharia equity screening. So we've done all of this learning has been acquired by the research team at Islamically over the period of past 20 years, alhamdulillah. Regarding the scholars, this most renowned Sharia scholars board backs Islamically. The Sharia scholars board is in-house to Islamically. That means we don't have to go out and refer. Our Sharia scholars are in-house. Whenever we have a doubt, we can straight away shoot them an email or have a meeting with them and get clarification. All emerging issues on compliance are discussed with the SSB, which is the Sharia Scholars Board. Islamic Research Team has 20 years of experience. This is the esteemed Sharia Scholars Board that we have, headed by Dr. Muhammad Ali Al-Ghari, who's from Saudi, Dr. Nazir Hamad from Canada, as well as Dr. Muhammad Amin Ali Qattan from Kuwait. Regarding our Sharia Committee Chairman, he is a PhD in economics from University of California. He is a key member of AOFI as well, as you can see over here. I can't highlight it. Okay, so in AOFI, he is in the board of trustees as well as he is a member of the Sharia Standards Committee. So hence, we always say that we are not different from AOFI, we're an extension of AOFI. So that's the distinguished resume of our chairman of our Sharia Scholars Board. We are very, very blessed to have him guide us. This is a Sharia certificate that the Sharia board has given to Islamicly App and it is certified and signed. This is just a creative. A video of what the Sharia scholars say is available on our YouTube channel. I can click over here and you can see the video. But since we don't have much time today, I will not be playing the entire video. Please do have a look. I'll just play a couple of seconds for you to see what video I'm referring to.
الحمد لله نحمده ونصلي ونسلم على سيدنا ونبينا محمد وعلى آله وصحبه. we're pleased today to be shown this view on Islamicly, and we found it really very useful. It's going to be a milestone.
You can have a look at this video, inshallah, on our YouTube channel. It's available over there. Let's get back to our questions. And that's the end of my presentation today. So very, very quickly, let's get back to our questions. Okay, there are many, many questions, and alhamdulillah, there are so many people who are waiting for these questions to be answered. Let me get straight to it. But before that, for people who have not subscribed to Islamicly, I hope you have all utilized the available offers going on. If you have not subscribed, please do utilize those offers and subscribe. It will be very, very good opportunity for you to become a part of the Islamic community, and it's your way of helping us out in terms of getting you all of these knowledge sessions. I'm very, very happy with so many people hanging out over here with us. At the end of the session, all of you will be getting an emailed certificate, so you don't have to do anything special. Just as the seminar gets over, within a couple of hours, the email will get generated and you will get a certificate. Please do share it on your Facebook pages or your social media handles, or tweet about it, or put it on your WhatsApp status. It is something that will give credibility to your profile as well. And we will keep bringing more of these masterclasses as we go along. Please do share. And if you like any of the content that has been done, that has been shared over here, please do give us a review on our app stores. Okay, let's look at the questions. Okay, Aisha has a question. Where do you get the information on the space occupied by prohibited products in a real estate space? Assuming a company has real estate space across the country, and each supermarket may have different space allocated to that product. Okay, all of this information is available on the annual report. If not available on the annual report, then we will have to look at its website, do an analysis of all its properties, probably go to those properties on the internet and then see the tenant profiles. It's a very, very detailed process. Analyzing real estate companies is a very detailed process. It sometimes takes a couple of hours and sometimes days to analyze one company from a business sector perspective. Okay, that's how we do it. And then we get back to the investor relations team as well. Since there are a lot of questions, some of the questions might have gotten hidden from me. If you have, if you see that I'm not answered or picked up your question, please let us know and post it again on top. I will be happy to answer it. Will this seminar be recorded? Yes, all our seminars are recorded. It will be soon available on our YouTube channel. Okay, Aisha again asked the question, how does Islamicly screen the financial ratio of a company that has come out with an IPO where the market capitalization figures are not available and the question has dropped off? Anyway, we have the financial numbers and we have a price band. Using that price band, we analyze the financial ratio. Please do have a look at one of the IPO that we have put up on the blogs. You will figure out the entire detail is given as to how we have computed the financial ratios as well. So essentially, market capitalization is not available, but since using the price band and the premium that the company is charging, we calculate it, and on the day of listing, we reanalyze it. That's how IPOs are analyzed. Matt Rahim says that Malaysian scholars view that CFD is non-compliant. Yes, CFD is non-compliant. It's a futures contract. All futures and options contract in the conventional sense are non-compliant. It's very clear. It's part of the OFI standard as well. There's a blog that we have written as well. Sorry, there is an email that we sent out a couple of months back, but we'll soon put this up on the blog as well. CFD, even if it is on a mother share, which is Shariah compliant, is not compliant. Trading CFD is non-compliant. Brother Adnan says that where can we get access to the fatwa by the Sharia board? On the app, you can click on the profile section. On the top, you can see view certificate. It's available over there. You can share it as well. That is the fatwa which has been given. To validate that that is the original fatwa, you can see the video of the same Sharia scholars on YouTube, what they're saying about Islamically. So that will give you a validation that it is actually signed by them, it is actually viewed by them as well. Brother Syed Ijlal Asif is asking me a question. Is trading in the US economy through apps like MetaTrader non-permissible in Islam? I'm not sure what MetaTrader does. If you're trading in a Sharia compliant product, like for example, equities, which are classified Sharia compliant, whether you use any broker, it's fine, as long as you're following two things: invest in Sharia compliant products, to follow the Sharia trading rules. In the specific sense of equity, the easiest thing that you can do and the cheapest thing that you can do is subscribe to Islamically to get the latest information on what stocks are Sharia compliant and what stocks are not. Use your preferred broker to go ahead and invest in it. That's the cheapest way of doing it. Okay, Muhammad says, please confirm about general banks, non-compliant, coming up with Islamic banking extension like ABN AMRO, etc., in order to attract Muslim investors. Okay, if a convention, this is not related to our subject, but I'll answer this question any which way. If a company which is a conventional bank like ABN AMRO or probably HSBC comes up with an Islamic product, okay, or an Islamic banking window as they call nowadays, and how can you be satisfied that they are Islamic? The best thing to do is to figure out and see if they are certified by a board of Sharia scholars. 2, they have an audit of that product. So any product that you buy from there or any deposit that you do, you need to get an assurance that this is managed in an Islamic manner. They will definitely have a Sharia scholars board. They will definitely have a continuous audit being conducted on those products. Obtain a copy of that certificate, then you'll be assured that that is fine. In principle, an Islamic window of a conventional bank is fine, no problem. Ahmed has asked, I found compliance of one company had changed to non-compliant on the next day. How can we select or trade shares from such companies if we have shares of one company in a day which it is compliant and found non-compliant? Okay, basically he says that how can we find out when the company is going to change compliance? You cannot know, but we provide a very innovative answer for that. On the desktop version, not on the app, on the desktop version, there's a compliance risk factor. That means if a company is compliant today, but it has a very high compliance risk factor, it is likely to become non-compliant very soon because of its trend of share price movement or its market capitalization movement. Right? So we can't be assured that it will move that way, but it gives you a heads up. So subscribe to the desktop version, you'll get that information. As far as what has to be done, if a stock turns from compliant to non-compliant, you have essentially 90 days to sell that off. First 30 days, you can wait and watch if it becomes compliant again. If it does not, then you have another 60 days to sell it off. Any capital gain that you make from the 31st day of the stock turning non-compliant to the end of the day, to the day that you sell it, has to be completely purified. Completely purified. Purification ratio is not applicable on that. Capital gains in the non-compliant period, that is from the 31st day to the day that you sell the stock, has to be completely purified. That means it has to be completely donated to charity. That's how you treat it. Okay, brother Syed says, is intraday trading halal? Yes, intraday trading halal, but there are rules to it. If you buy first and sell later, it's halal. Please do look at the forums discussion on the app. There are tens of questions about that, and we've answered most of them. There is a specific blog on our website for intraday trading, which tells you what things are allowed in intraday or not. Essentially, if you buy first and you sell later, it is compliant. Muhammad Firdaus bin Muhammad Noor says, gambling simulation is not permissible even though it does not involve any money, real or virtual. Yes, even if you're doing gambling simulation games, it is not permissible. The revenue that the company earns from such products is non-permissible. Discuss with the Sharia board, they're very clear about it. Sarosh Khan says, if we can check Sharia parameters from company balance sheet, what value does Islamicly add? The value that Islamicly adds is that we do all of this for you already. Okay. Plus, there are so many intricacies about whether this is permissible or not permissible. All of this has been reviewed by the Sharia board. The sheer amount of data that is being processed, that is the value that Sharia, that Islamicly adds, the credibility that we bring into the entire stock trading process in a halal manner is the value add that Islamicly brings. All of these knowledge sessions is what is the value add that Islamicly brings. Purely the headache and the time-consuming nature and the non-transparent information regarding screening. Islamicly solves all that problems by taking all the pains of contacting the end investor relations team as well to find out what is the Sharia sensitive information and then classifies it as Sharia compliant. Not only that, it monitors it on a daily basis and alerts you as soon as a stock turns its status. So that means if a compliant stock becomes non-compliant or a non-compliant stock becomes compliant, Islamicly will alert you instantly. That's the value add. And there are so many forums. You can add holdings. You can do tons of stuff over there. The desktop version has a lot more functionalities. And we are coming up with even more functionalities, inshallah. Brother Ahmed says, can you suggest some Sharia compliant stockbrokers and also which are non-compliant too? There is no such thing. You can trade with any stockbroker as long as you do two things: invest in Sharia compliant stocks and do the trading in a Sharia compliant manner. How can you do that? Just subscribe to Islamicly. We will tell you what stocks are compliant, what's not. We will monitor your portfolio. Instantly, we will tell you what has to be done if a stock turns non-compliant. Secondly, by virtue of these educational seminars, as well as all the content on the blogs, you will figure out how to trade in an Islamic manner. That's the value add about Islamicly. And trust me, if you have to manage your wealth in a Sharia compliant manner, a combination of your broker, whoever that be, plus Islamicly subscription is the cheapest way of managing a Sharia compliant portfolio. Brother Aslan says there are other companies that do Sharia screening of stocks and the result of that screening differs from each other. What should I do? Brother Aslan, first of all, follow the one which you think is providing a credible information. What I mean by that is how transparent are they? Or is their screening process completely disclosed? Are they coming up with explanations? Are they open to your communication? Stuff like that. Look at their Sharia board. Look at their experience of doing things. Compare two stocks where you think there's a difference. Ask, let's say for example, there's a difference between us and somebody else. Ask us a question as to why it is compliant and non-compliant and go ahead and ask them. You do this exercise, you will get to know which is the best. Once you decide whichever is the best and more credible, just follow that. Don't do something like if you see one stock is compliant in Islamically and there's another stock which is non-compliant in Islamically, but maybe compliant with them, you go ahead and invest in that. You need to be consistent. You need to follow one app. Just follow one app, whichever thing you feel is right. Okay, your analysis you need to do. We can't tell you which is more credible. I can't say anything about anybody else. But for us, we are in front of you. We give you all sorts of information. We are absolutely transparent. We have so many forums. We allow you to challenge our compliances as well. And we have been doing this for 20 years now, alhamdulillah. And you can see the Sharia Scholars Board, which is supporting us. So that's whom we are. Okay. Okay. Aisha says, how would you know how many pork pizzas do Domino's Jubilant Food sell? Or what's the proportion of pork sale? They don't give that information. Yes, they don't give that information. You have to make an assessment. Plus, you'll have to pester the investor relations team to get you some information. We have discussed this in Sharia committee, in the Sharia committee, and we have basis what they have told us. We have made the classification on the Islamicly app. But the Arif says, what is the threshold of McDonald's or Domino's? I was told McDonald's stock is non-compliant. McDonald's stock is Sharia compliant on Islamicly because we have asked the Sharia board as well as the investor relations team, and they have come back saying that although they can't disclose the revenue that they get from selling pork-based items because they don't disclose that kind of information, what they have told us over a telephone call that I personally made to McDonald's, that the revenue from purchases of raw materials that McDonald's does. So less than 2% of that entire purchases comprises of pork. So basis that we have made McDonald's compliant. Khalid says, where can we find the basis of thought behind the screening process? This webinar is the basis wherein I have explained to you what is the Sharia screening criteria and what are the bases that these things have been decided upon. Let's move on. Bilal says, evaluating the Sharia compliance of companies can only be done by annual reports, as the details of interest income are not well described in quarterly reports. So is it okay to screen a company based on 2019 financial year annual report if the 2020 financial annual report are not yet released? Yes. What he's asking is, what financial report should be taken? Essentially, the latest should be taken. So if whatever date you are in, as you can see in our case, for Amazon, we have taken 31st December 2019, although we are already in July. But that is the latest annual financial number. We've got to take that. Now, for doing the financial ratio screening, okay, we have the information from the latest quarterly. The latest quarterly was the 31st of March. Although we are past the Q2, we should be doing it on June, but it is not yet in our hands. It has not been yet. It was not yet released when we were doing that report. Hence, we took the 31st March. So whichever is the latest financial report, that has to be considered. Brother Nazish says, it would be very transparent if Islamicly app shows figures which supports the screening, either compliance or non-compliance. We do that. We are giving exactly as to what sector it is being compliant and what is not. We are coming up with all of these research reports, as you can see, so that it builds credibility, right? At the end of the day, Islamicly app is for you to tell what is compliant, what's not, right? As long as you get that information, that's enough. Plus, to give you credibility, whether we are doing a good job or not, or whether we're doing our jobs or not, we do all of these webinars, and then we're giving you all the research reports on the internet. Brother Syed, he's again asking me whether intraday is halal or haram. I've answered that. Intraday is permissible as long as you follow those rules of buy first, sell later, and follow the broker rules as to the point in time when you become the owner. So it depends on your broker as well. Arif says, is hedging like options? Yes, hedging is like options. Not exactly like options, but it is a derivative instrument. And hedging of stocks is non-compliant in the conventional sense. Brother Noor Muhammad is asking whether this video will be available. Yes, it will be available on the YouTube channel. Brother Syed says that Brother Syed says, does your app have the option to purify the capital gains on a stock after it turns non-Sharia after a certain date? If yes, how is it done? Whether that functionality is not yet available, but yes, we are working on it, but it will take some more time. It's not going to come up in the near future, but it is in our radar that we tell you instantly that what is the purification that you need to do on the capital gain side as well. Let me take a break. For all those who have not subscribed, please do subscribe. If you think that you're not ready to subscribe, the least that you can do, if you like us, if you are here, please do give us a review. I've been telling you this for quite some time in my webinars. It will really help the community to build trust on what we are doing. If they read good reviews or whatever you feel about us, please go to the App Store and just give us a review. It will probably take you a couple of seconds. But to other people, it will give them a good indication as to what Islamicly is, because you have gone through these kind of resources. So reviews are very important. Please do follow our YouTube channel. A lot of content is over there. Our blogs, which are there on the internet, as well as on the app. Like those articles on the app as well. Share them. You can download the PDF from the app and you can share it on WhatsApp to your friends group, to your traders group, all of those things. And ultimately, do subscribe to our Facebook, YouTube, and Instagram handles. And above all, please do subscribe. Any issues, get back to us. Couple of offers going on, very exciting offer going on right now as well for subscriptions. Okay, Brother Shafir says from India, got info that Reliance is debt-free, but in Islamicly app it is showing as non-compliant. Any valid reason? There's a proper blog that we have written about it on the Islamicly on our I'm just sharing my screen. We had written a full-fledged article about Reliance Industries. So this is the offer that is going on currently on Reliance Industries. As you can see, Reliance Industries Limited, net debt-free but still non-compliant due to debt ratio failure. Why is it there? The entire reasoning has been given, including the financial numbers that has been considered. So please do have a look at this. That's what Islamicly is all about. We are live, we are updated, we are current. We always are trying to be ahead of the game in terms of providing you content, understanding your needs way ahead before you ask us this question. So the content is already there. Essentially, Reliance is not debt-free. It is net debt-free in a non-balance sheet way. But if you look at the balance sheet, its debt still exceeds its market capitalization by a large amount. Secondly, there is articles on the internet that all the cash that they have got, all the billions of dollars that they have got by selling Geo platform stake, is not gone to retire the debt as of now. It's actually gone to mutual funds. It's actually gone to debt funds. So it is possible that Reliance might breach the cash ratio as well. So Islamicly looks at all those aspects from a Sharia perspective, just doesn't go by hearsay as well. Plus it gives you transparent information about your question as well. So that's the power of Islamicly. So do subscribe to us and be updated about all of these issues. I hope Brother Syed that Brother Syed has pointed to Brother Shafir that there is an article about this. Thank you, Syed, for that. Let's move on. There is a user called Subhan, I believe that's what I'm doing. Are you doing this level of detailed screening in India, and do we get same level of detailed research reports? Absolutely, yes, absolutely same kind of research is done for every stock in the world. It is absolutely the same level of screening. We put those things up because those are the most traded and the most searched stocks in the world. But such kind of research reports at the backend in our database are there for every company. We're going to put this up slowly and slowly. Every day you'll get newer and newer research reports available. So one research report from India, and one research report from Malaysia, one research report from the US, and one more other from one of the Arab world countries, so from the GCC, will be published on our blogs as well as on the app on a daily basis. So please do come on our blogs, and you'll get a notification as well on the app when that research reports are published. But the level of screening is the same for everyone, for the world over. Bashir, hi brother Bashir from Tijar. Good to see that you are part of this webinar as well. Yes, the entire video is going to be shared on the YouTube channel. So the slides will also be there. Subhan again asked how frequent you evaluate detailed company screening. The sector screening, since information is available only in the annual reports, is done on an annual basis after annual reports are disclosed. Financial ratio screening is done on a daily basis for market capitalization adjustments. Newer numbers are ingested every quarter as soon as they are published from the company. That's how we do screening. So Islamicly is probably the only screening provider in the world who is updating its screening on a daily basis, that is 5 days a week. So it's absolutely live, absolutely fresh. Nasi, do you have plans to start a halal mutual fund of those companies which you have screened? Good idea. We're not an investment advisor as of now. So no, we let you choose the stocks which are Sharia compliant. So because you are the best judge. But then Ahmed says, does compliance changes? What will we do if compliance changes after our trading? Yes, compliance is a dynamic process. There's a blog on our page which talks about is compliance static or dynamic, which talks about why does compliance change, what is the reason, and how often does it change. Okay, that's one. Two, if you follow Islamicly and if you're a subscribed member and you've added the stocks in your portfolio on the Islamicly app, you will instantly get notified when a stock changes compliance. Even for non-compliant stocks, you can add it to your follow list, and if it becomes compliant, you will get notified so that you can go ahead and buy that stock from your stockbroker. What to do when stocks change compliance? There is a blog again on the on the blog section of Islamicly app, as well as on the website, which tells you what has to be done in case stocks change compliant. Compliant stock changing compliance, you have 90 days to trade out of it. First 30 days, you can wait and watch if it becomes compliant again. If not, then sell out. If you're mistakenly, or if you're now subscribed to Islamicly and you found out your existing portfolio has some non-compliant stocks, you have two options. If you're in profit, then you have 7 days to sell that stock. If you are in loss, then you can wait till the price recovers to the investment price, and then you can sell that stock. Simple as that. Hence, subscription to Islamicly is definitely required so that you can monitor your stocks in a Sharia compliant manner on an ongoing basis. Okay, Tayyum says that does the app screen ETFs? As of now, no. Some ETFs are there, but it is on our radar, and inshallah we'll cover ETFs globally as well. Wasim says, will this be posted on YouTube? Yes, it will be posted on YouTube. Wasim again asked that how do you deal with companies that don't have financial accounts present? If you're a listed company, you need to have that. So we screen only listed companies. Shafir says, thanks Syed bro for the clarification. Good. Aisha has asked 2 questions. When considering market capitalization as a threshold, the drawback is the debt would remain the same, but market capitalization may change overnight, even to the extent of plus or minus 90% when there is a good or bad news. If you're trading in penny stocks, yes. But if you're trading in well-established stocks, no. It doesn't change that much. Yes, there are drawbacks, but compared to total assets, it's a more stable criteria. That's what the scholars say. Again, she asked, like, should scholars probably consider adopting market capitalization for short-term trades and total assets for long-term investments, since they are the most relevant thresholds in their case? How can we know that you are going to utilize the screening for a short-term trade or for a long-term trade? And criteria has to be stable. It has to be one. It has to give you an impression of one rule fits most. We're not that a huge amount of participation has not taken place, unfortunately, in the entire Sharia equity screening space. Hence, there has to be clear-cut yes or a no kind of a response. We understand, and the Sharia scholars understand, there are drawbacks in some of the areas of Sharia screening, but that's where we've got to live with that as of now. Of whatever we are, whatever economic environment we are, whatever equity trading environment we are, we believe we have covered most of the ground, and inshallah the research is ongoing. The Sharia scholars are still looking at newer and newer ways and more stricter and more finer and better parameters to screen equity stocks. So this is not probably the end of the road for that. Your suggestion is there. We probably will have a look at that as well, and then see if it makes sense. All you know, it might become a criteria in future. Shafir again says, one important question, sure, how much time do we need to maintain when we invest in one company and needs to move in some other company? There is no minimum time of investment. You can buy now and sell in a minute as well. So intraday trading is permissible as long as you follow the trading rules and you become the owner of that stock. And that happens when your broker gives you an intimation that the trade has been executed. You become the owner of that stock. Look at the terms and conditions of your broker when you acquire irrevocable rights over a share. There is no such thing as you need to hold it for 10 days, 5 days, 12 days, and then sell out. Sharia doesn't have any restrictions on the time limit that you can hold, the minimum or the maximum. We don't have a time limit. So Tayyum again says, why not 5% instead of 33%? I think he was referring to my question. I think I've already covered that. That why is 33% applied on financial ratio screening and why is 5% applied on sector screening? I've already answered that initially. Saroj Khan says, is debt equal to current liabilities in balance sheet? Debt is long-term debt plus current liabilities as well. All of this should be interest-bearing. Okay. We're coming to the end of the questions as well. Time up? Okay. We will quickly wrap it up. We still have a lot of people and a couple of questions, but inshallah we'll do it. You're visible in the screen.
Yeah, they should
From here.
Like this.
Okay. Let me quickly wrap this up. Ashraf says, is this session recorded? Yes, it is recorded. This will be available on your YouTube channel. Okay. Yes, all of this will be available on the YouTube channel, so absolutely don't worry. Imran says, please have a space for IPO on the app and suggest a stockbroker. Stockbroker, we can't suggest as of now. Go ahead with whichever broker you like. Yes, we are actively covering IPOs, especially in the Indian and the US markets. And as of now, we're putting it up on the app on the blog section for a detailed review. In the next update on the blog section, you will have a separate tab for the IPO section, and it's coming up very, very soon. But yes, all the IPOs are getting covered. Once it gets covered, you get a notification on the app. Click on that, read the compliance status, and you're good to go. On the day of listing, it will be available in your normal universe where you can search for it. But the Arif said, if there are no dividends for that stock, no dividends, that means no purification. Chill. Absolutely no problem. Aisha says, would it be possible to provide Shariah compliance based on both market capitalization as well as total assets, or at least give us an option to do the screening ourselves on our app using the criteria we want? Aisha, this Islamicly is a Shariah screening app wherein we give you the compliance information. It is not a Shariah screening tool. Basis what the Shariah scholars have said, basis what the Shariah screening criteria is, the results are published on the app. So I don't think we will give that functionality because it doesn't make sense to us. If you think that this criteria is not correct, if you think that you need to follow total assets criteria, then you need to follow a screening provider which gives that screening criteria. What the Shariah scholars say is Shariah screening should be definite. That is, we should give clear-cut answers because there's a lot of confusion in the market already. Let's give them clear-cut, compliant, non-compliant answer. That's it. And that's exactly what we are doing. Iskandar says, could the purification ratio be higher than 5%? And if so, is there a threshold? Yes, purification ratio can be higher than 5%. Okay, that means there can be a scenario wherein operating non-permissible income, I repeat myself, operating non-permissible income is less than 5% of total income. Hence, the company will pass the sector screening criteria. But it may have non-operating income, which is non-permissible, which could be more than 5% or 6% or 7% or 10% or 20%. In that case, the company will be compliant if it passes the financial ratio screening as well. It will be compliant, but its purification may be higher than 5%. Classic case in point was Moderna. If you see, there is an article on the blog section of Islamicly as well as on the app, which talks about that Moderna is classified as Shariah compliant, but its purification is as high as 39%. Go have a look at on the app for all those who are subscribed to the US market. It is possible, absolutely possible. And there is a complete explanation over there as to why this happened. So you can have a look at that. Although I've also covered it in today's discussion. So yes, the purification can be higher than 5% and there is no threshold for that. Subhan is asking, is if company selling non-halal meat permissible? This question was posed to the Sharia committee, and the Sharia committee said that as of now, if a company is selling pork or pork-based products, they are classified as non-compliant. But if they're selling animals which are halal for consumption, but they may be slaughtered in a non-halal manner, that is that processing is processed in a non-halal manner, they are still considered compliant as long as they are not processing dog meat or horse meat or pork meat. If they're processing camel, cattle, and lamb meat, but they are slaughtered in non-halal manner, the revenue of the company is considered halal. From a Sharia sector screening perspective, only for equity screening, this is the guideline. It doesn't mean that you can consume non-halal slaughtered meat. Adnan says, I don't understand how you're able to determine percentage of revenue coming from alcohol when this type of information isn't provided. Yes, a lot of information is not provided because none of the accounting standards are sensitive to Sharia. It is the expertise that you gather by doing this research over the years. You've got to build models regarding data points available, use that models to build screening models for certain sectors. So we built a screening model for retail supermarkets, we built a model for hotels, we built models for restaurants, and this is basis a data set that we have. In addition, we always rely on primary data, so we go back and ask the investor relations team as to what is it that you think is the non-permissible revenue. In the absence of any of these, we then analyze the sector and basis our research and the models that we have built, we try and give a classification on that. But we pursue very, very diligently the investor relations team to get us an answer. And that's the uniqueness of Islamicly. That's where Islamicly helps you. That's why there is a value addition that Islamicly provides. This is exactly what is the value addition that Islamicly provides. And you can be rest assured that the best effort has gone into finding out what is the non-permissible income of a particular company. The best effort has been put into finding out whether a company is Sharia compliant or not, and its continuous compliance. Okay, brother Arif says, wouldn't subscription services be split up into categories of content provided such as shipping, media, music, book, etc.? You guys put 100% non-compliant, non-permissible. We said subscription, the majority of Amazon Prime revenue is because it allows you to view that content. Most of the shipping shipping services of Amazon, although it is free for Amazon Prime membership, but the bulk of revenue that the company gets for Amazon Prime membership is because they provide that digital content platform and not because they provide the same day shipping. Hence, we've taken 100% of that. Plus, we do not have a breakup. If you go back and ask Amazon a behemoth about the breakup, they will never give it to you. So to be conservative, we've taken 100% of that as non-permissible. Okay. Arif says that they just guessed it. Okay. I've given an explanation. And yes, it's better to be safe than to classify something aggressively. Bilal has a similar question that, like in the case of Amazon online stores, revenue breakup is not available and we're not sure about the amounts. As I've said, in very few cases, you will get clear-cut revenue classifications, right? You've got to have that kind of expertise to find out from various sources by analyzing the financial statement as to what could be the non-permissible income in this sector. You've got to have that expertise, which Islamicly has alhamdulillah acquired, and that's the reason we confidently do these things. And we've been doing this for 20 years, and the world's best asset managers, the world's largest asset managers, the world's largest index providers use Islamicly screening. Okay, Aisha says, you have been saying we believe, we assume in a lot of cases. In believing and assuming, not subjective. Yes, it is subjective. It is not definite because it is not clearly given in the financial statements. This is to the best of our knowledge, to the best of our efforts, and this is what the results are. When we say we, yes, it includes Sharia scholars because the process of doing screening has been given by them. Brother Saad says, so if you trade in Amazon and purify 8% of capital gain, will that be permissible? Absolutely not. Once a stock is considered non-compliant, it's non-compliant, end of story. You cannot invest in that. A lot of questions and answers are happening between the user itself. Good answers by Arib. Wasim says, if the stock is Sharia compliant, do we still need to purify the parts that aren't? Yes. If a stock is Sharia compliant, if you get dividends of that, you need to purify your dividends with the amount mentioned on the Islamicly app as to the dividend purification amount. It's an integral part of Sharia compliant equity trading. It is an integral part of maintaining your stock as a Sharia compliant portfolio. Okay, Saad has a question which says that why can't we just invest in any stock and just purify the non-permissible part? Saad, there has been a massive thought that Sharia scholars have put in terms of classifying and giving you a criteria as to what's permissible and what's not permissible. If the threshold has been given for classifying something as permissible, right, that threshold makes you compliant and that threshold makes you non-compliant. You cannot have a hybrid mechanism going around over here. If the government has said that the speed limit is 100 miles an hour, right? And if you are driving at 110, right? And you say that, okay, I was driving at like 10% above the threshold, whatever is a fine, I will pay 10% of that. If I was going 100% above the driving threshold, the speed limit threshold, then I'll pay the full fine. No, I mean, if you continuously do it, they're just not going to collect the fines. They're going to throw you in jail. You got my point. The point that I'm trying to make is once a criteria has been given to classify things as Sharia compliant and non-Sharia compliant, end of story. That's it. Just follow that. Let's not make hybrids because the Sharia scholars have looked at all of those things. If there was a facility, if there was a possibility, if there was a Sharia basis for doing all that, it would have been given out. The Sharia scholars want more and more people to take part in the economic capital markets. Got my point? So don't create these hybrid rules. It makes no sense. It's just to satisfy ourselves. Okay, he says Facebook does not produce any advertising content of their own. Facebook provides advertising content of their own, okay, if they are marketing themselves. And that content is absolutely fine. So advertisement, as what I meant by they don't produce the content, is some third party comes to Facebook and says, I want to run an ad on Facebook. Can you produce my ad? They don't do that. Got my point? That's why they don't. That's why we say that they're not an ad producing agency. Bilal, very good answer. I answered all the questions. Thank you. Ahmed says, I found company compliance changes between days. How can trade such company share and how should we select such companies? If you trade one company share on when it is. Okay, Ahmed, I've answered your question. Essentially, you need to subscribe to the desktop version. Over there, we give you the compliance risk factor, which tells you which stock is likely to remain compliant or non-compliant for a long period of time or for a short period of time. Brother Iskandar says, are the financial ratios computed using the balance sheet of the company? Yes, the financial ratios are calculated using the numbers disclosed in the balance sheet. Whatever is the latest, the annual or the quarter, whatever is the latest is what we use. In terms of financial sector, in terms of business sector screening, we utilize all sorts of information: the annual numbers, the balance sheet, talking to the investor relations team, and trying to corroborate the evidences from the annual report as well as third-party news information. But the primary document has to be the annual report. Let me try and finish this. I'm pretty tired already. Thank you, Khalid. Thank you for this detailed discussion. Thank you, Arib. How often do you update the report for each company? How often do you update the report for each company? The screening is updated on a daily basis. The sector screening has to be updated on an annual basis because that's when we get more and more information. What's the next question? Some compliant stockbrokers and some non-compliant stockbrokers, please. Brother Ahmad, we don't have a list. Any stockbroker is fine as long as you're trading in a Sharia compliant manner. Okay. Muhammad Aqib said, any Indian scholar given fatwa for Islamicly? I don't think so. We haven't approached anybody. But go ahead and ask other people. If you know any scholar, or if you know somebody who's more influential in the Indian market, go ahead and ask them about us. They might know us. How to check a Sharia compliant IPO? All the coming up IPOs will come up as a report on the blog section, and you can check that. In the next update that we're coming up, we will have a separate IPO section. Arif says, are options on a compliant company halal? No, it's not halal. Muhammad Yahya asks, is intraday trading halal or haram? It's permissible as far as our scholars are concerned. It has to be in a Sharia compliant manner. Muhammad says, will Islamicly support in buying shares, or we need a third-party services for that? Yes, you need a third-party broker. We don't allow investments through us. Tawfiq Ahmed says, software company sells software to a bank. Is it permissible? Yes, it's permissible if that software can also be used in a Sharia compliant bank. So if it has an alternate use, that revenue is Sharia compliant. Burji says, what is the difference between Sharia calculation of Islamicly and some other app? The Sharia criteria is different. You can have a look at their Sharia criteria, have a look at our Sharia criteria. Our Sharia criteria is mentioned on the blog, on the website, as well as on the app, on the Sharia screening criteria section. Second thing is how fresh is the data. The third thing is how well there is research done. Hence, there will be differences in screening. Aslan says, if your screening of one stock differs from yours, what should we do? You need to figure out which screening service provider you need to follow. If you're following somebody who's following the EOFI criteria, you need to first figure out if they're actually following EOFI criteria. Is the research that good? Is the research perfect? If yes, follow that. If you feel that Islamically research is good, Islamically research is great, but they're not following EOFI criteria, follow us, because we are actually following EOFI criteria, but our criteria is an extension of EOFI. It's not a divergent criteria. So you need to follow one. Whichever it is, just follow that. Yes, brother Nasir, very good, very good point. He says Mufti Taqi Usmani Saab has an additional criteria that you need to protest un-Islamic practices of a company at his general body meeting. Does Islamically consider that to be criteria? Absolutely yes. So when you become a shareholder, a very good point, and I missed this, as part of Sharia compliant investing, in the annual general meeting, whenever you hold a Sharia compliant stock, you need to send them a letter saying or protesting the amount of money they keep in interest-bearing accounts. You need to protest saying that I do not agree to the non-permissible incomes that you get, although it is less than 5% of the total income, you need to officially say that. It's very important. And this advocacy is very important. And inshallah, as more and more people do that, initially nobody will hear that, but it will rise up. People will catch on to it, and inshallah, we'll become a force. Tawfiq Ahmed again is asking what's the minimum duration for which we should keep a stock before selling. There is no minimum or maximum duration, absolutely none. Brother Nasir says most of McDonald's meat is non-halal, is non-zabiha. Yes, yes, it's non-zabiha. Just 1 second. My battery is going low. I need to get my charger. Can you get my laptop charger, please? Thank you. Okay. But almost all of McDonald's meat is non-zabiya. As I said, if it is pork-related revenue, it is non-compliant. But if they're selling beef or they're selling lamb or chicken, that's considered to be halal income. Although if they may be non-zabiya, that is done in an Islamic manner. Okay, I will have to wrap this up in like about 10 minutes. Okay, if I miss some questions, please do come back to our next webinar and ask us. I will definitely have to wrap this up in 10 minutes. Let's do that. Do you have plans to give a platform for investing in the US from India? We don't provide brokerage services. Inshallah, we will look into these things. We have all of these requests written down, and we do have some platforms through which we can do things. There are other brokers which allow you to do that. Just Google it and you can get to some brokers who will allow you to invest in the US stocks. We're wrapping up this in 10 minutes. Yeah. Just 1 second. Punch this in. Okay. I'll have to disconnect my light. Soon on the YouTube channel. Rafi says investing in gold exchange traded funds are halal. In principle, they are fine. But if you're looking at a particular ETF which is trading in gold, you need to ensure that they have a Sharia certification. If they don't have a Sharia certification, then it's not fine. Ayaz says, very good question. When reviewing a shares with consolidated balance sheet, which figures are considered? Standalone or consolidated? Consolidated are considered because we need to consider the entire group. Standalone is not considered. It is consolidated balance sheet numbers which are considered for the financial ratios. Aslan says AOFI is considered as the best Islamic financial institution, but why do they have more stocks as Sharia compliant than in your app? I'm not sure what you're referring to. AOFI criteria was developed in 2004. Our Sharia criteria has been in continuous development because we have an active Sharia board which looks at every emerging issue and tells us what has to be done. Our Sharia criteria is an extension of the AOFI criteria. Our chairman of our Sharia board is a key member and a pioneering member of AOFI. So we're not very different from what AOFI is. Apart from that, we also have exposure to a lot of other Sharia scholars who are also part of AOFI. So our screening criteria is actually not very different than AOFI. What gives the difference is that how is that implemented? Do we have a research team? Is the screening done properly? Is the real thing. Saad has a very good suggestion, and we are already in the process of incorporating that. Inshallah, we will soon be releasing it. He says, "Can you release short videos of the most popular questions?" We will do that, inshallah. Thank you. Yusuf is asked if revenue of provided item is less than 5%. and the application and the Islamicly app shows it's Sharia compliant, can we find out what is that? How much is that? Is it 0%, 1%, 2%, 3%? And what is the reason? As of now, we don't disclose that. But for the most popular stocks, we are doing the stock report so that we're doing these stock reports so that you can get assurance that we are looking into these things. Apart from that, you will know the dividend purification number for every stock, so you can figure out why a stock is non-compliant. Sorry, what is the non-permissible income of that stock? How does it matter if it is coming from alcohol, pork, or whatever? The rules are the same. Subhan says he's getting some notification and he's not able to go through. Subhan, just go to the WhatsApp support that we have on Islamicly, and you will be able to figure out your query. So go to profile, click on the WhatsApp thing. You'll straight away get connected to our customer support. They will help you out instantly. Okay, sorry. I thought something's happening. Will a company pass sector screening if it passes sector screening if it does 4% pork, 1% alcohol, 2% pork? All of it combined has to be less than 5%. All non-permissible incomes from operating segments combined has to be less than 5%. So a company will fail in your example, Arib. Ahmed Haq says Apple has recently launched Apple TV Plus. It already had iTunes business for digital movies, songs, plus Apple has huge cash pile. All these factors combined, the compliance risk is still 0%. Yes, Apple's compliance risk is 0%. Their non-permissible revenue to total revenue is very, very negligible. Very soon, inshallah, this week, the coming week, we are going to publish a full report about Apple and why it is considered Sharia compliant. Have a look. You will get the same detail as what we've given for Amazon and Facebook. In terms of its financial ratio compliance, it is well within the threshold. For a long time, we don't see it failing its thresholds. Hence, the compliance risk factor is 0. Brother Muhammad, thank you for your comment. Abdul asks, Assalamu alaikum, wa alaikum salam. What do we do with the profit received from non-compliant stock? You need to donate it. Donate to anybody of your choice. Brother Ahmed says, do you have any broker which only have Sharia compliant companies? You don't need that. If you go to a broker which only shows you Sharia compliant companies to trade, he will charge you a premium. Why do you want to pay that premium? Just use the cheapest broker, the best broker, whichever you like, and look at Islamicly and trade in that stock. Okay, there are so many repeat questions now. Brother Muhammad says, how to proceed with purchase? Will we get help from Islamicly after subscription? We're always available. We're 24/7 available in terms of help. You can reach us from the desktop version. You can reach us from the help section itself. From the app section, you can go to profile, click on the WhatsApp. We're always available on that 24/7. Our customer support team is doing a good job on that. If they don't know an answer, if it is more technical, they'll tell you that your complaint or your suggestion or your query is recorded, and we'll inshallah get back to you. Faizan says, I can't find the blog for intraday trade on your website. It's part of trading rules. Just look at the blog for trading rules. Khalid says, are you planning having an API at some point in time? Write us an email as to what you mean. info@islamicly.com. info@islamicly.com. Send us an email and we'll inshallah respond to you. Talha Qazi says, will it be available in future? Yes, this will be available on a YouTube channel. So do subscribe to our YouTube channel, our Facebook page, our Instagram page. Subhan says, is API available? Send us an email as to what you mean. We have a full-fledged technology team. and we can help you in doing whatever you intend to do with our API. info@islamicly.com is our email ID. Sayed says, does your app send an alert when on the date the stock turns non-compliant? Yes, it sends an alert. Shafir, thank you. I think yes. Finally, we have reached the end of the seminar. 2 requests. Subscribe to Islamicly app. We have got very good offers going on. If you have not already subscribed, thank you for being such a great audience. It's been a really long session. At the end of this, whoever has attended will automatically get their participation certificates by email. No need to follow up. Absolutely rest assured, we have all your details. We will send it individually by email. So look out for that email, and please do share all your the certificates on Facebook, Instagram, WhatsApp. Do write us a review if you think that we are any good, we are any little bit helpful to you, and do support us by subscribing to the app as well as to our channels on social media. Shamsuddin has a last minute question. He says, how to purify capital gain? You don't need to purify capital gains, absolutely. If you're investing in a Shariah compliant company, when you bought and when you sold, if it was a Shariah compliant, no need to purify capital gains. Simple as that. Thank you all for being a lovely audience. Keep lookout for our blogs. We are publishing a lot of content. Subscribe to our YouTube channel. We don't have much participation on Facebook, but we are doing a lot of content on Facebook. Please do look, add us on Facebook and follow us on Facebook as well as on LinkedIn. So we are there on all social media channels. We are providing all of this content for free. It's only the subscription which is paid. Everything else is free, and it is for your benefit. Thank you for coming on the session. Thank you for giving us your time. Assalamu alaikum wa rahmatullahi wa barakatuh. Jazakallah khair.